Afternoon, how are you all doing? Afternoon, Pip, Richie, Cromberg, Miura, never going to say that one right. Virginia, Christian, Michael, Steve, how are we all doing? Ready for non-farm payroll? 6 minutes to go. 6 minutes. So, the DAX trade that I took this morning, I think I'm going to stop out on it before the news. So took this long down here after the open this morning. Still in it, sitting in 1.8%, so it's decent. Got up to 2.1%. That was my initial target there, which is pretty much hit. But I decided to move the target all the way up there, just in case we get a new spike. But I'm going to stop out on it before the news by the looks of things. Might not do. We'll see. It's risk-free anyway, so it's either money or lots of money. But the opening range breakout wasn't very good this morning. The market moved too fast and too hard before the open. Yeah, basically, that's the only trade I took this morning on the DAX. Banks loads this morning, which I've been through. I went through most of it in the Telegram group and in the live room this morning, but got out of loads of yen today, loads more yen. There's quite a bit sitting in profit. Haven't really got any exposure at all on the US dollar at the moment because the US dollar hasn't been moving. So we might get a fair bit of movement on the yen. So we'll see. It's all going to move basically on non-farm, usually does, one way or the other. So we will see what happens. I said it right, did I? Miura? I don't know how to say it. Afternoon, Colonel, Mumo, Neo, Dixie Dumping Trust. Don't know yet. We'll find out. Afternoon, Michael. DAX just stopped run you. Yeah, it's going to get me as well by the looks of things. Volatility coming in before the non-farm. So we've got 5 minutes to go. House or rocket? Place your bets. Colonel Pinecone. I'm long Aussie dollar CAD. I'm long Aussie dollar CAD. Yeah. So ADR-wise today, the only ADRs we've had have been the yens. So obviously CAD yen screamed down. I've gone long on that this morning. ADR reversal. H1M5 entry rather on CAD yen. Swiss yen still coming down. Euro yen. That hit ADR. Everything's come off of ADR basically. So if you took any of the ADR hits today, they've all bounced. They've all basically paid out. Pretty much every single one of them. So ADR, reversal alert, out. They're all just basically pulled back today. So if you took any of these yens this morning, you've been paid on all of them. That one, US dollar yen, not so much. Got 30 out of it, which is about a third of an ADR. So actually that CAD yen. I'm just going to put a break-even stop on this. I'm not going to go into drawdown. If this yen is going to rally off the back of the US moving, I'm not going to go into drawdown on a yen pair. Not after all this lot. That CAD yen will either be a break-even or it will fly. And if it flies, obviously, pound yen and Swiss yen are going to go into drawdown. So it doesn't matter. Yeah, anyway, so there's your ADRs today. All yens, obviously, as we know, because the yen's gone nuts. Lots of RSI extensions. We'll have a look through those in a minute. We've got 3 minutes to the open. So no other news this morning. Bit of news out of China. But Russia's crude price. So yeah, there's no other news this morning really. We've had the ECB talking, but nothing major. So you wouldn't expect a lot really out of on the front of non-farm payroll. They won't do a load of movement. So I bet 100 euros it will be dumping our lovely Dixie. US dollar CAD short. Cool. Afternoon, XR update.news. Close my long Aussie CAD at break even before the news. Afternoon, great. Yeah, so anybody, anything you got in profit, bag it if you want. I've not really got a lot in profit I want to bank at the moment. So, but if you have got stuff in profit, now's the time to do it because it may well be in drawdown in 2 minutes' time. Then again, it could be in huge profit in 2 minutes' time. So, but anything you're unsure about, like CAD yen, for example, not particularly. I still think the yen's got a lot of strength in it. So, makes sense to break even that. Okay, we have 50 seconds to go. So we will watch. I'm going to watch the DAX just because I got a long on it. Tell you what we'll do. We'll watch both. We'll watch the Dow and the DAX. And we'll watch Euro US dollar. So that will tell us what the US dollar is doing. See how we get on. So 20 seconds to go. Okay. Spreads widened. Whoa, Jesus, look at that spread on Euro US dollar. Okay, big push Euro US dollar. Negative US. DAX is rallying. Go DAX. Got a trailing stop on the DAX at 35 points. So I'm just locking more and more and more money in. So initial spike obviously is down on US dollar. That doesn't mean it's going down though. So unemployment rate for the Canadian dollar, 5.4. So unemployment has gone up for Canada, which is negative Canadian. Unemployment rate is as forecast for the US. Non-farm change is down ever so slightly. So basically that's neutral US, negative Canadian. Neutral US. So I wouldn't expect this to do much. Look, every single chart frozen. So yeah, rallying on the indices. Let's wait for Robo Forex to squeeze a little bit more data into the tube. Let's have a look at the Euro US dollar on E8 for a bit. Waiting for them to wake up. So not a big reaction at all. That's absolutely tiny for non-farm payroll. US dollar CAD obviously coming down. So the Canadian dollar, that was negative CAD. So obviously everything would be rallying against the Canadian dollar. Not massively though. Again, this isn't a massive reaction to this, any of this. So still a lot of orders going in, but Robo Forex is totally frozen. Just rescan the servers, see if I can connect to a faster server or one that works. Anybody still long on the DAX? from this morning, from that trade that we took this morning. Well, I don't know if anybody took the trade with me this morning, but I'm in it. If you are, well done. There we go. RoboForex just reconnected. So it's pushing up. Just disconnected again. Robo. Really bad around news. JC, still in the DAX. Cool. It's quite typical for non-farms to pull back and whipsaw. So that news isn't great for the Canadian dollar. It's totally neutral for US. So obviously we're having a reaction to the downside to the US. As I've said all along, every single negative point of news we get on the US dollar, it collapses. Every positive news we get on the US dollar, it kind of does this and thinks, well, maybe I might move up. But every negative is a real negative. So that's a big drop. The Canadian dollar, that's only a 0.1. So not a big variance, but it isn't good. So the fundamentals gone. So the Canadian dollar basically, so we've got the 3.6 on unemployment there, which we'll update in a bit. But for Canadians, again, another positive another positive move on the unemployment puts pressure on them not to increase that, which puts more inflationary pressure on. So should be short. US dollar CAD ADR. It should be short for the Canadian dollar. US dollar is really not happy about this at all. Oh, wish I hadn't got out of my US dollar yen earlier, but never mind. So what's that done to the P&L? Not a lot. Not a lot at all. Have I closed anything out there? So a bit of drawdown control done on CAD yen. Oh no, sorry, that's the stop. There you go. So that CAD yen that I took long, yeah. This is why whenever I say news trading is suicide, if you ever buy any EA or strategy that is around news trading, forget every backtest you've ever run in it, yeah? You saw me, when I came onto the live room, place a break-even stop loss on there, yeah? But break-even stop on that. I said, I don't like the look of it. If this is going to drop, I don't want to go short. I don't want to go long on the CAD yen. That's where I put my stop. Look at where I actually got stopped. Slippage, news trading. You can't do it. Does not work. Never, ever buy a course or strategy or EA or anything that revolves around news trading. It's a total waste of time. You'll never get the results you ever see. So yeah, look at that for slippage. Got slipped 17 pips, quarter of an ADR on a break-even stop. It's actually more than that because obviously when the news came in, it was there. So they actually slipped my order from there down to there, didn't they? So that move from there to there happened instantaneously. They could not fill my order there. There was no volume. So the orders were just basically at the whole lot. So 27, nearly half an ADR. Criminal. But on the plus side, made 3.1% on the DAX so far, and it's still going. So very nice. Right. So let's just see what happens with the rest of this move. So we're pulling back off straight off of ADR on the US dollar CAD. So if this is going to be an actual move, the best play for non-farm payroll is to wait about 10 or 15 minutes and then see what it's put in that 10 or 15 minutes after the initial move. If it's pulled back, try a long. So basically, the best way usually is to go in the direction of the break. So you will typically fade this to a certain point and then you can take a long on it. But sometimes it is just a whipsaw and they'll pull it all the way back down to the lows. Everyone flips short and then they pull it all the way back up to midline, and you just end up doing that all day, going nowhere. So, but sometimes it does rally in the direction, although this time we've had no real reason for the US dollar to move in any direction because the news is as expected. Unemployment, obviously, for the CAD is short. So shorts on the CAD. So looking at RSIs, Aussie dollar yen is extended to the downside. That's just pulling back at the moment. Aussie New Zealand was extended on the 4 hour. That's pulling back at the moment, but again, just whipsawing. CAD Swiss, so that's the first CAD pair. So we should be looking for shorts on the CAD, ideally, but that is extended on the 4 hour to the downside. It's also extended on the hourly. So got a long position started on that this morning. So potentially weak CAD. So I might have to add a second onto that. So let's have a quick look at where that's potentially going, if you've taken that one. So CAD Swiss, yeah, we're at the monthly, aren't we? So this one, we looked at it this morning. Big drop down. All we've done is accumulated so far. Now we've whipsawed on the news. So if this does drop further today, somewhere in this accumulation is the obvious spot to look for a bounce. So we've got the lows, which are 200 ADR. So if you've got in there, that's 1 ADR, that's 2 ADR. So you may, if this does drop now, the CAD, you may be looking at sort of 3 or 4 positions before we get down to those lows. If it gets all the way down to those lows without bouncing, this thing's going to be exhausted. So we'll be pulled back up into there somewhere. But doesn't seem to be reacting massively at the moment. Euro CAD we've got as well. So that's extended to the upside. We've just had a sell on that one because it's an RSI extension to the upside. I think the entry on that one was this morning as well. So that was entry this morning. Weak Canadian dollar. Strong euro, so this will probably push up a little bit further from here. We'll still be looking to come back down into there at some point, though. So upside risks on this. So be looking for a push up into this area here. Yeah, so that's the strong support resistance zone, which is ADR. So if you get in there, you could take a second position at ADR and then grab the pullback. Pound CAD, that is extended. So I've just taken a second position on this one this morning. So first entry was here on the H1 RSI extension. Since we got into that on that ADR hit, it's just gone sideways. So got a second entry on it this morning on that reversal alert. And obviously now it's pushed up on the Canadian dollar weakness, or rallied into the Canadian dollar news. So push back down into that propulsion gap at some point. Need to put TP on that second. So I'm going to put TP at 125 ADR to the downside. That one. New Zealand dollar CAD. That's coming down on Canadian weakness. Blimey. Aussie dollar is collapsing, really collapsing. The Aussie dollar seems to be the worst affected thing off that news. Weird. But anyway, New Zealand dollar and Aussie dollar collapsing. So New Zealand dollar CAD, that was extended on the 4 hour, just about. So that is starting to react now. We haven't had a profit take on this move at all. So this is the profit take move underway. So again, you would have taken that entry this morning if you were trading H4. Right, great entry, is it? But anyway, just extended. And US dollar CAD, obviously. So that's extended on the 4 hour to the upside. So that was a short entry today. So if you got into that one this morning, you are in from there. Well done. You should be out now already, because it's already done an ADR. There we go. There's your RSIs. Stopped out on the DAX. $900. That'll do. Not a bad trade this morning. So that was the first entry this morning. There. And got stopped out in tiny profit on that one on a trailing stop because it just completely chopped. And then, as I said this morning, looked at this low. We put in a lower high. Then we put in a lower low. Then we put in a lower high. Then we put in a higher low. And I said, that's where I basically got in. Said, basically, that is the W pattern. So we were looking for that, which we got. And off we went. Helped along by the news. Always good to have some news on your side. So I'm just going to shut that platform down. I'm not trading anymore today. That's it. No point in taking opening range breakouts today, I don't think, because we've just had all that volatility coming in. So if you're going to trade on the Dow, basically, or any US index, you've got this massive whipsaw now that's put in. So we've got 45 minutes until the open. This thing's going to be flying around for the next half an hour to an hour. So by the time you get to the New York Open, wherever the price is, it's going to be absolutely exhausted. So the opening cash balance today is not going to be there because we've had all the movement, all the volatility pre-market. So there's no point in trying opening range breakouts today. Just give it a miss today and go and do something else this afternoon, I would. If you do want to take them, though, obviously just be careful because you're likely to get a whippy session and it's not going to be a lot of volume in the market. But saying that, that's what we thought yesterday. It all went absolutely mental, didn't it? 200 ADR. So there you go. So let's just see how this gets on for the next few minutes. So it is pulled back. So we've pulled back into Propulsion. Sellers are adding back into their positions at the moment. So there's a 50% retracement already happened. US dollar CAD is probably not the best thing to take short because that news basically is neutral US dollar, negative Canadian dollar. So what you want to do is look for something to short against or short the Canadian dollar with. So Aussie dollar CAD long, CAD Swiss short, CAD yen short. This Canadian dollar's rallying though, look. Whipsaw, isn't it? Just a whipsaw. David, I know you don't like 8 cap, but no freeze for me. And spreads did widen, but not horrendously. Mind you, I don't scalp on indices. Doesn't matter. If you don't scalp, 8 cap's absolutely fine. The overnight swaps though have been very bad. I've seen on 8 cap. And market execution is incredibly slow. If you're scalping, you can't trade with 8 cap because of the market execution. But if they've sorted it, they've sorted it. I don't know. All I know, David, is I've tried with two prop firms, both using 8 cap. Worst experience I've ever had trading in my life. Press the button, sit there. Bang, executed order. Like 5 seconds, it's already moved 15 pips. Useless. So I tried it with a different one, same experience. And every time I mention the word 8 cap, anybody using 8 cap tells me how crap they are, which is why we call them 8 crap. So, but if you're not scalping, market execution isn't massively a problem. If you're trading hourly charts, then it doesn't really matter. But the overnight swaps and spreads apparently are bad as well. But then they're bad with all brokers. If you use a stop loss, you will get stopped out on spreads. There's nothing you can do about it. That's what they do. That's their job. The broker's job is to identify at the swap how far they can spread to make the most money. And that is exactly what they do every night. There is no broker on the planet that doesn't do it. So 8 cap are no better or worse than anybody in that respect. So, but if you can find a good prop firm that uses 8 cap that's got better rules than the big sort of 4 or 5 players, then it's worth it. But I've never found any prop firm with 8 cap that's any better than my Forex funds or EA. So for me, there's just no point in changing. You either go with the Rolls Royce or you go with the Mini. If you go with the Mini, you're going to break down more than the Rolls Royce. Just doesn't make sense. Just the way I've always been. I use the big boys. If I'm going to get my phone, I get it through a big provider. I don't get it through a tiny tin pot company or a supermarket. It's the same I think you should do with prop firms because it's your money at stake. Euro CAD is pulling back. So we have just whipsawed. Again, up there, hit that top. Spread would have taken out all liquidity there. All liquidity there. So everybody that's entered the market on Euro CAD today is liquidated. Back to square one. Typical news play. Whipsaw. US dollar is certainly weak off the back of this news, though. So pound, euro US dollar and pound US dollar buys. Potentially. Richie Rocket, 1K profit on US dollar CAD. Good job. Pound US dollar ADR. We know that. Why are you telling me that now? I know that. It's already hit that. JC stopped out on the DAX, but nice win. Cool. Yeah, right. The US dollar CAD was not the best short for today. Pretty good to me. Would you advise a multi-day long on the DAX today? If you want to, yeah. So the DAX basically, we're pulling back at the moment, obviously, on the DAX. Well, it seems to have completely stopped. So the play on the DAX is obviously the two gap fills. So we've got the gap there, the gap there. So those are the two plays today. Obviously, this morning was the entry, the one that I took this morning down here. That was really your entry. So if you want to get in it, get in it. But where you would put a stop now, under there is going to be too big, really. So you look at your risk reward. If you get in on the DAX now, taking a multi-day gap fill, and you put a stop under the low, you're going to get 1.5 R to 2 R. This morning, the entry that I got this morning was 10 R. But I got in with 1% risk, so there's no way I'm holding a 1% risk for a 10 R. Too much money. So, yeah, you could get in now or wait for a pullback. So if the DAX pulls back today, get in on the pullback. So assume this is going to be your peak formation low. Push, pull, push. You could take a high break there. So you could get in, like it's bullish now. You get in now, stop under that low. Or you could take a break of that high and a stop under that low. That's a better risk reward. So where we are now, take a break of that high. That's 3R. There's the gap. That's 3R. Break of that high, stop under that low, hold it until Monday / Tuesday. There's all sorts of plays you can take, but just make sure you've got positive risk reward. And that's obviously assuming that we are going to do the gap fill. But, you know, look at the DAX. You are very much fighting a downward moving beast at the moment. So this might well just collapse straight out the lows. We don't know. there's no explanation for this move yesterday. It's 200 ADR after a gap. So including the gaps, about 225 ADR yesterday. There's no real news or reason for this. We had the PMI figures coming out, but this thing was collapsing long before the PMI figures came out for the US. So, I don't know. Tricky one, the DAX at the moment. Right, look for a short. 6E on Apex just closed. Took a short 6E on Apex. Good job. Never moved enough for me, the FX pairs in futures, or the FX instruments in futures. Pound yen almost recovered today's move. Yep, so we're putting into propulsion at the moment. So this is looking all right to me at the moment. So high, low, double top, lower low, lower high. We've got so much support. The pound yen is the real tricky yen at the moment. So is the euro yen, which is why I'm out, because it's and the Swiss yen as well, which I'm still in, because these are bullish pairs. Pound, euro, and the Swiss are bullish. The yen is also bullish. So when the yen pushes, everything that's weak, like the CAD, everything that I'm out of on the yen, is fine. Everything that is bullish, you're going to struggle, because when the yen weakens after it's had a push and then it stops, they take control back and push back up again. So these are the harder ones to get out of. We just have to wait and see what happens with them. But the pound is bullish. And as you can see, that one is pushing hard. That actual pound is actually coming down now, look, today. So this shows ADR on pound US dollar again. Why do you keep doing that? Oops, wrong one. It's really weird. The pound US dollar keeps alerting me to ADR hits every time I switch to it. Nothing else does, though. Some glitch in there somewhere. So yeah, all the pound pairs that seem to be coming down at the moment, but all the yen pairs are rallying. So this is yen weakness that we're seeing at the moment. So yen's just weakening basically off the back of that news with the US dollar. So you can see by the US dollar yen how weak that yen is. So the US dollar is weak, the yen is weaker. So just a massive weakness coming through on the yen. Pullback, basically. We've had a big, strong push down. So it's going to weaken. It's going to pull back. Don't panic just yet. Panic later. Brian, didn't run ORB on EU this morning. Looks like I would have been whipped out anyways. Yeah, probably. There's no point in trading anything much in the mornings on non-farm payroll days. Market's really not interested in moving until we get the news, and then it will move. So yeah, you would have gone short, stopped out, you'd be long now. Actually, you would have been whipsawed. Look. So there's your 4-hour low and your 4-hour high. So you would have been triggered long, stopped out on that probably, whipsawed around, pulled back. Same as any breakout strategy, you're going to get whipsawed multiple times on it. Colonel Pinecone, long the DAX. Go for it. So what's the time? So we're half an hour in now. So all these moves now, we're half an hour into them. So the ranges that have formed now are probably decent ranges to take. So that low there on US dollar CAD, we've got 3 minutes left on these 5-minute candles. So that low there, basically US dollar CAD, break for shorts, that high there. So that's kind of the range of the move, basically. So if you're going to play any breakouts or continuations off of non-farm payroll, that would be what I would look at taking on the US dollar CAD. It's a bit of a wide range, but I think you're going to find it's pretty similar across most. So there's your euro. Yeah. So after the initial news spike, that's the range that was formed. So if it's going to do a continuation push in either direction, that's where you would go. But you look at the size of these ranges that you've got to play. 30 pips, which is half an ADR. So if you wanted to get, a 2R, you've got to move more than an ADR today from where we are after a non-farm payroll. It's not going to happen, is it? I don't think it's worth trading much this afternoon after news events like this. You either make your money on the news or pick it up and wait until Monday. Michael, when position trading conditions are poor, would you focus on the opening range breakout? Yeah, we'll focus on both. Doesn't matter if it's poor or good. Always better to trade more than one strategy, because if you've got one strategy and that one strategy fails, you're failed. If you've got two strategies and one of them's failing, the other one's got a chance of working. So the best trading portfolios out there consist of three strategies: a breakout strategy, a mean reversion strategy, and a trend strategy. The market is always going to be in one of those three conditions. So if you trade three strategies with a positive risk-reward ratio, there's a good chance one or two of those strategies is going to be working at the same time. So for me, position trading is the bread and butter, but ORB, scalping, is another bread and butter. To be honest, I've been position trading for many years, and the trouble with position trading is you need to either over leverage your balance slightly to actually make enough money out of it, or have a decent sized balance and proper risk. With ORB, trading on prop and scalping on prop, you can make 4 or 5K very quickly, as long as you are consistent and you don't go mad constantly, which is the problem with most people when they're scalping. You get beaten down by the losses. But if you can make 4 or 5 grand regularly using opening range breakout strategies, then that is just another way to make money. Position trading is another way to make money. They both work. There's no reason not to run both. This one, ORB, although we're not doing the ORB today, obviously, because the market's not open for half an hour, but the opening range breakout strategy and scalping isn't something you really need to pay an awful lot of time and attention to, do you? So it's half an hour a day, an hour maybe. That trade this morning, we watched this on the DAX this morning. We watched the ORB unfold to the downside. Anybody that took the 5-minute pre-market made 1.5 hour very easily this morning. Done. 10 minutes. You're done. The ORB EA just took the trade and you are out. If you took the 15-minute, you got just about a 1.5. No, you didn't quite get 1.5. You got a 1R, but you probably wouldn't have taken that and stopped out break even on it. I took that scalp this morning. I've just been sitting here watching it all day go up. Didn't take me long to analyze and take that trade, did it? What everybody wants to do and tries to do with scalping is they try and get in on this candle with the stop under this low, and that's hard work. My play today was to get in and take one trade, and it worked today. Other days it doesn't. Same with the ORB. You get in, you take the trade, and you get out. So it doesn't take a lot of work to do this, and the ORB EA will do it all automatically for you, but I just like to watch stuff. The position trading side of things is just a different approach, totally different approach. Do both. I'll just shut it down. But I mean, this EA account that I'm running at the moment, and my Forex funds account, I mean, the EA I've made 4% in the last 2 days. Oh, no, I haven't. 36.7. No, it's $700. Is that all I've made on that account? I thought I'd made more than that. Did I have a losing day? Must have had a losing day this week. This one I was up more than that. But yeah, I mean, the thing with prop is, you know, if you've got a mortgage of $1,500 a month or £1,500 a month or whatever it is, you can easily make that in a session or 2 sessions. So if you can get a funded account, you just need to get your funded account up to a level where you can pay yourself. So you just got to pick the prop firm that means you can get paid quickly and you don't have to jump through too many hoops to get paid. That's the difficulty. And as some people are finding out, some of these prop firms have got a lot of hidden rules, like Fidelcrest. A lot of hidden rules. You've got to trade exactly the right amount of lots that you were using originally. You have to have everything closed within a certain period of time. You've got to do this, that, and the other. And it's not until you get the contracts you find out what the problems are, which is why I like my Forex funds in EA. There is nothing. You get paid 7 days, 14 days. That's it. You haven't got to jump through hoops. You haven't got to do this, that, the other. Take Profit Trader for futures. Exactly the same. There are no rules. You can get paid on day one if you want. Brilliant. So run both strategies. Obviously, the scalping, opening range breakout, is high risk, high reward. Position trading is very low risk, lower reward, but more consistent. Totally different approaches, aren't they? Joanna, I feel like these markets are the most difficult in many ways. In many years, manageable, but you really have to pay attention. Yeah, that is massively different. The difference happened when COVID hit. COVID changed everything in these markets. It's changed the way that we approach everything. It's changed, and the war in Ukraine, it's changed the way that energy is consumed. It's changed the economics of countries totally. You know, companies, it's changed the way companies work. Everything's changed since COVID. Everything. The markets have changed. You've got to adapt. So you have to be, and this is partly why you have to be involved in trading all the time. You've got to be in front of the charts. You've got to be watching what's going on because you need to identify when things are adjusting. Because when you see things not reacting the way they used to, the only way you're going to identify if things aren't reacting as they used to is if you're watching them every day. Yeah, I sit around at coffee. I go spinning, and I sit around having coffee with people that I spin with. And people talk about interest rates, and I blurt off, you know, oh, the interest rate in America is this, the interest rate in Canada is that. And they look at me like, how the hell do you know what the interest rate is in Canada? I live it every day. All I do every day is look at what is going on with fundamentals for currencies worldwide. So unless you're ingrained in it and to that degree, it's very, very hard, especially in conditions like this, isn't it? Adapt to survive. Things change. You have to change with it. Jobs change. You know, everybody's working from home now. They weren't 4 years ago. Now they are. Virtually everybody I know that has a job now works from home. They don't work in offices anymore. Companies have scrapped offices. Why have an overhead of £25,000 a month for an office for all your staff when they can just work at home? Buy them a mobile phone. Done. Stick a camera up so you can watch them if you want. I know companies that are doing that as well. Are you at your desk? Yes. No. Everything's changed. Why wouldn't the markets change with it? Nathan, I've been doing good position trading. At what point do you think I should start increasing the risk? Why do you want to increase the risk? If you're doing good, keep doing what you're doing. If you want to make more money, increase your balance. Yeah? Don't increase your risk. If you increase your risk, you're going to make it a lot harder. Position trading is all about being in the market, waiting for the market. If you're in something like we've been in with these CAD, with these yen pairs and this Aussie New Zealand squeeze, for example, yeah? If you are in that with twice as much risk, that's twice as much pain. The reward isn't twice as much. The exit isn't going to be twice as big. You're not going to hold it twice as long on the way down because you've got more risk on. You're going to get out faster. So trade exactly as you are. Use 0.1, 0.25% risk per entry, whatever you want to do. But if you want to make more money and you're trading a 50K account, go and get another 50K and trade a 100K account. Trade exactly the same way on that. If you're trading a $1 million account, yeah, you trade that the same way as you trade that and that. The trading is no different. The money goes up, the profit goes up. You don't increase your risk. To increase your risk, you're going to increase the problems you're going to have. So if it's working, keep doing what you're doing. This is why we use percentages, yeah? This is why we look at the market in percentages. Percentage in drawdown, percentage gained, yeah? Forget this. All this money, yeah, doesn't mean anything. None of that is relevant, is it? Yeah. If you can return 5% to 10% gain per month consistently, you are a profitable trader. If you're trading a $10,000 account, you're returning $500 to $1,000 a month. If you're trading $1 million, you're returning $50,000 to $100,000 a month. Yeah. What you're doing is you're returning 5 to 10%. If someone gives you 100 million, you're still going to return 5 to 10%. Yeah. Money doesn't come into the equation. Percentage gain is what you're interested in. If you can keep a percentage gain on your account, the only thing that makes more or less money is the amount of money you start with, because your risk is based on the amount of money that you have in your account. Your job is to return profit, return on investment. That's why it's called a return on investment. Yeah, so focus on that. Don't focus on increasing your risk. If you increase your risk, the months that you are profitable, you will make more money, but you will be in twice as much drawdown. For example, let's say you doubled your risk. If you went into, let's say you went into 10% drawdown this month. If you doubled your risk, you would have gone into 20% drawdown this month. You might think that's not a problem. Happy with that. But what that will do is drastically affect your thinking process. You will be looking to do aggressive drawdown faster than you were before. You'll be looking to get out of positions faster than you were before because the panic will set in twice as fast as it did before. Yeah. So focus on exactly what you're doing, the process, keep everything the same, just increase the account. If you can't increase the account, tough. You can try and increase the risk, but you will have psychological problems that come along with that. When I was trading $1 million of funded accounts, I couldn't do it because my psychology changed completely. Every time that tick happened, instead of it being 50, it was 500. Yeah, the difference between something ticking once and making you $500 and ticking 3 times and making your mortgage, and then something ticking $150, which is a night out maybe, is a massive psychological difference. If you focus on this only, you'll have a massive, consistent, no problem trading life. If you focus on increasing your risk, this number will cause problems because it will get everywhere. Everything you do will be twice as dangerous, twice as profitable, twice as hell. Yeah. Try it, but try it on a demo. And then think psychologically, what would I have done if that was real money? And it would make a big difference. I always appreciate your knowledge and tools. Thank you. Thoughts on running the ORB and market reversal at CA hedging set file on one prop account? Yeah, if you want to. Obviously, the more trades you take, the more risk you have. if you have 3 ORB days go wrong against you in a row, and you happen to get into something that lasts for 3 days and goes in the wrong direction, you're going to blow your account based on your drawdown, aren't you? So there's a company, actually, somebody sent me, Steve sent it to me, actually. It was this this firm called Forex Prop Firm. And I was looking at them because they have this thing where they don't have a drawdown. Yeah. So your daily drawdown is what kills the vast majority of traders, this daily drawdown. On their one-step challenge, you have a 6% overall drawdown, a 10% target, and a daily drawdown of 4%. Terrible. Everybody else has got a better evaluation process than this. When you go to your two-step challenge, however, they remove the daily drawdown. Now, this is an 8-cap broker, so up to you, but I just don't like 8-cap. No drawdown. Overall drawdown, 12%. So as far as it goes with my Forex funds and E8, this is a very, very, very good evaluation to take. The cost, I don't know what the cost is. $100K, $450. Cheaper, even better. So yeah, I mean, this, you know, when I say there's got to be a real reason to pull you away from my Forex funds and E8, that is it. But there's always a hook. When you go and read the contract that you get when you get funded with them, when you get funded, that no drawdown disappears and it goes back to the original. So you then have a daily drawdown limit again. So what they do is they make the evaluation process really attractive to get you in. You get in, you get funded, and they turn around and go, well done. Right, now you can't trade news. Now you can't do this. Now you can't do that. And by the way, you got a daily drawdown again. So all the rules and the conditions that you used to pass the evaluation flip and change back to really, 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 really hard. So I don't know if you know that, Steve, if you've looked into it, but if you're in here. But yeah, go and read up on the FAQs and stuff. It's not as good as it looks. It's good on, but it's very nice evaluation conditions, but you would have to drop your risk down. The reason I like the look of it was for position trading, because I can position trade an account within 12% and probably get a target hit. But obviously, when you get the funded account, you wouldn't be able to position trade it because you'd have a drawdown, daily drawdown. So. But that's what brought me onto that, because if you're going to trade with the ORB and the market reversal alerts hedging set file on the same account, you're obviously going to experience potentially bigger drawdown on the account, aren't you? What brand is that? ForexPropFirm.com. Never heard of them. So Steve just sent me. There you go. Didn't know that. There you go. So yeah, Steve sent it to me the other day. Because it's the first prop firm I've seen that hasn't got a daily drawdown, which is awesome. It's what I've been asking for. I haven't been asking for, but what I've been hoping for ages. Removing that. Yeah, this is what I want. Give me an account of money and set me a loss, and I will go and hit your targets for you. But if you set me something that is going to trip me up intraday because I'm having a bad day or a bad week, I can't do it. Suddenly realize, I better double my risks. I've really got to get this back fast. Bang. And that's set there to psychologically break you when you have two or 3 days run of bad luck. I can have 2 or 3 days of run of bad luck, no problem at all. I know that the good luck's coming, like the DAX today. It's just going to happen. You're going to get in, it's going to fly, and as long as you stay in it, you're going to make all that money back. But the daily drawdown stops people doing that. And what happens is, as you have a couple of bad days, that squeeze level of you getting down to that point, that maximum where you are going to blow the account, At that point, you go full tilt. And then the daily drawdown gets you that day if the max drawdown doesn't get you. So removing that is a big psychological barrier, which will make a lot of strategies suddenly become viable for prop firms. But of course, they get you to pass with your strategy that is viable. And then when you get the funded account, they remove the viability and you blow the funded. That's clever. They're the first ones that have done it. But when the funded account becomes no daily drawdown, I shall be all over it like a shot. It'd be fantastic. But no one's doing it yet. It will come. I'm sure it will come. And they're offering 40% discount as well. So, well, 10 to 40. Again, this is like, we're offering 10 to, it says up there, look, get up to 40% discount, 10 to 40. You log into Telegram, you'll get 10. But 10% is 10%, isn't it? You know, at the end of the day. Huge profit splits up to a maximum of 100. And the other thing that annoyed me was I watched this interview with their boss. This guy, right? I'm sorry, I'm not being funny, ageist or anything. I'm nearly 50. This guy set up a prop firm. He's a highly experienced trader. He's about 18. I can't take people seriously. These guys that are driving around in like Porsches and standing in front of big houses and Lamborghinis and all this sort of crap, they're 18 years old. You don't know anything about trading. How can you start your own prop firm? It just all stinks. It all stinks to me for some reason. I don't know. I just don't like them. It's one of those companies I suddenly, and the fact they call themselves forexpropfirm.com. Just, you know, I've been around too long. I've got a scamdar, and as soon as I see a website, immediately my scamdar goes off. They've got to really prove to me that that's not a scam before I start getting involved. I'm just conspiracy theorist. Anyway, I remember back in the day, you did funded CTI series. Yeah, I was funded with CTI. Would I think of doing anything like that again with one of my challenges, funded accounts? Yeah, could do. The trouble is, my funded accounts, I trade the ORB on them, but I also take other trades, and I'm not here online streaming all the time when I'm taking trades. So it's difficult. I think with the CTI one, I went over every trade I took to pass, didn't I? I think. So I could do something like that again. I could do it on this one because I'm running this EA evaluation at the moment, this EA account. That's just an evaluation that I just started. They've got an offer on at the moment. So yeah, I could do it with that account and go through every trade that I take on it. But all the trades I'm taking on it are either ORB or the one I took this morning, you know, but the one I took this morning, the thing with scalping and with trading in general, everybody's trying to focus on just finding a setup and trading a setup. Sometimes you'll look at a chart and go, this looks like a lovely long, because the risk reward on it this morning was beautiful. If the trade worked, it had a lot of upside. That's why I took it. I didn't take it because there was a specific chart pattern I saw that did this, that, and the other, and blah, blah, blah. Looked like a good long. And that's basically what I'm like. I would just take trades because it looks good. It'll either work or it doesn't. And that's kind of what you have to do. You can't sit there and wait for a specific entry or setup because every day the market conditions are going to be different. Some days the ORBs will go, some days they won't. When they don't go, you've got to make your money somehow. So you have to take a trade. Sometimes an inside bar will present itself. Sometimes I'll see a symmetrical triangle formation. Other times I'll see a market reversal alert and think that looks pretty good. Other times I'll see a good support resistance level and think I'm going to take a bounce off of that support. There's no way to pass, if you like. You just trade. So I could do a video on a recap video of every trade that I took to pass an evaluation. I can't do it live in here because I could sit here all morning waiting for a setup, nothing happens, and then I go offline and 15 minutes later I go, that looks like a good short. I can't record every trade I take either because I'm just not that organized. Brian, got to say, I'm pleased with Apex so far. Apparently they had changed some of the rules from before. The only thing is payouts are only twice a month. The other problem you're going to find, Brian, when you go for a payout is you can't have it. You do know that you can't draw your money out. They will only give you £1,000 a month for the first 6 months, $1,000. You know that? Let me find my contract. Apex. No. That's a certificate. Where's the contract? No, that's another certificate. I've got a lot of certificates. Hang on. Oh, go away. Try to find the contract. Oh. I can't find the contract. This is the thing that will get you with Apex, right? I don't know how much funding you've got. It's so well hidden. So basically, the maximum withdrawal each payout period, twice monthly, dependent on the account size is. So let's say, for example, you've got a 100K account. The maximum withdrawal that you can make is $2,500, right? After month, I think it's month 3. Month 1, the maximum you can have is $1,000. So if you had a 100K account and made 10K on it, 10% in a month, they will give you 1,000. Month 2, same. You can have 1,000. Yeah. Month 3, I think it goes up to something like 2,500. Month 6, you can have it all. But you've got to survive for 6 months in the futures market on a $100,000 account without blowing it with a trailing drawdown. You never, ever get the full payout. That's the problem with Apex. Funded trader, not funded trader, take profit trader. They basically have no problem with payouts whatsoever. Basically, you get paid out immediately. Yeah, there you go. That's basically their comparison. You get paid immediately with take profit trader, which is a massive, massive advantage. So day one, you get a 100K account. You take a lucky trade, you make 10K. Stop. Take it out. Done. None of this waiting around. That's the problem. And Take Profit Trader are the first company to do this, which is why I started trading futures with them. Because this is owned by a Canadian hockey player. Yeah, very, very good. If you want to trade futures, that is. Market is totally flat and dead at the moment, by the way. I'm just waffling on. There's 2 minutes to the open. I'm going to watch the open. I'm not going to trade it. Yeah, very quiet at the minute. US dollar is still coming down against the CAD. We're not going anywhere at all at the minute. Whipping post. Uh-oh, he's gone. I dropped out, did I? Oh. So I'm just trying to catch up on the chat. City Traders Imperium does not have daily drawdown. No, but they do have a minimum period of 30 days. There's always something wrong with every firm. Did you ever give your thoughts to the Fivers on Fivers Bootcamp? Yeah, I did. Fivers Bootcamp, passed it. But the leverage is too low. You can't use it, as someone just said. But yeah, 1 in 10 can't use it. Can't trade with it. Couldn't even trade FX. Couldn't trade the indices with it. I could not, literally, the Fivers. So I'm going short on the Fivers. The Dow starts pushing down, pulls back, pushes down again. I go, yeah, brilliant. I'll add another position onto that. Sorry, you can't. You haven't got enough leverage. What do you mean I can't add to a winning trade? You can't trade it. You can't trade 1 to 10. Nobody can make money out of 1 to 10 leverage unless you're taking one trade with a risk and a reward and you stick to it. It's not trading, is it? Opening range breakout on the Dow is short. So there's your 5-minute pre-market. That is your 15-minute pre-market. Either way, if you've taken the pre-market, you're short. Sorry, no, that's the open. Idiot. That's your 5-minute pre-market and your 15-minute. You're still short. So the market's open short. We'll see where this goes today. I don't think we're going to get an awful lot of movement out of it, but we'll see. Where can I start from your YouTube? So go onto the website. Go to Position Trading Handbook. There. This document explains how to get started with everything that I do. So it's all the important stuff to watch, read, and in what order to do it. So it just basically goes through everything I've ever produced over the years. And if you follow that document, you'll be about 25 hours in. Okay, there's a link to the website. I've been watching Steve Marrow's videos and I really like how you see the markets. Yeah. So Steve Marrow is one of my kind of influencers, if you like, I suppose. Beat the Market Maker. A lot of his stuff is rubbish. Well, not rubbish. A lot of his stuff is the same as everybody else's. It's the same. It's all the same. Everything's the same. Everything moves on support, resistance, and market structure. That's it. Market moves in waves. Whether you want to use Elliott wave, you want to use market structure, you want to use ICT, BTMM, basically the guys that kind of have identified how the market moves. That's what you want to follow. Forget trying to look for specific patterns because patterns don't repeat themselves. Elliott wave patterns will repeat themselves loads of times. There will be another 50,000 examples where the Elliott wave pattern failed. So literally all you do is you get into the market and you get out of the market when the market gives you the opportunity. Yeah. So when you get into a trade like the CAD yen, I stay in it until I get out of it. So I shorted it there. It pushed against me. So I waited for the wave to complete and then I exited. Yeah. As long as the market moves in waves and market structure, you'll always be able to exit any position. The problem everybody does is they try and get in with 1% risk, hoping to make a fortune. If you get in with 0.1 or 0.25% risk over a period of an ADR or half an ADR's movement, the worst thing that can happen is if it pushes against you for 3 days on the trot, you might be in 1% of drawdown. What's the problem? Take another one, because if it's moved that far without pushing back in the other direction, it's highly likely to do it. That's basically what my whole methodology is. It's taken everybody else's education that I've ever learned over 15 years, removed the one thing that always made me lose money, which is the stop loss. When you remove the stop loss, you stop getting stopped out. When you stop getting stopped out, you give the market room to breathe. When the market breathes, it puts you into profit. You take the profit. It's as simple as that. As long as you understand how the banks move the market, all you need to do is wait for the banks to get ready to take the profit. When they take the profit, you jump on their move. Very simple. This is the indicator that tells me when the banks are ready to take those profits. That's the simple version. The complicated version is about 25 hours long, and that document will take you through it all. So go and watch and read that. Where is City Traders with no DD? Their website says 4%. I haven't looked at City for a while, actually. They've got absolute City since I know Daniel. I don't know Daniel Martin, but I've spoken with Daniel and done lots of work with Daniel in the past. The CFO of City. When I was with them, they were a prop firm. Now they have multiple courses they sell, all sorts of stuff, which is a little bit more down the broker route. Yeah. So brokers give you free courses. Why? So that they can teach you how to press buttons. Because when they press buttons, they make money. Yeah. So if I go long in the market, they make money out of my spread and my commission. If I hold it overnight, they make money out of my swap. So it's in their interest to sell me something that makes me press the buttons in their platform. CTI is selling multiple courses now that get people into trading. And then they go, here's the funding. It's X money for the funding. So they sell you the course, then they sell you the funding to trade the course that you will fail because the course has a failure rate. Yeah. So they've gone down the route, in my opinion, of the money-making machine rather than the prop firm. But I haven't looked at their actual challenges and what they do for ages. 10% absolute drawdown, daily drawdown, 4%. Yeah. But you see, I've got so many different things. I've lose interest after a while. Let's just see what the DAX is doing. Dow, rather. So absolute whipsaw on the Dow. So there's your 5-minute ORB. Just untradeable today. All the volume's gone in. The market's got no liquidity left, so you're getting slipped all over the place. Amy, you could give us your trades as signals. I'm not doing signals. I hate signals. Signal services are useless. I'll give you all my signals, Amy. So you can follow my signals and not learn how to trade and make a bit of money. But then when I decide, actually, no, I don't fancy doing signals anymore, you're out of a job. Learn to trade. It's like saying, I'm going to become a Formula One driver, but I'm just going to sit on the back of Lewis Hamilton's car. When Lewis Hamilton retires, I can't be a Formula One driver anymore because I never learned how to do it myself. Doesn't work. Signal services don't work either because nobody ever gets the same entry on a signal service. So look at Trader Tom, for example. Yeah. The amount of times people moan about him because they can't get the same entries as him. Of course you can't. Because by the time he's thought about it, seen the opportunity, pressed the button, put it on Telegram, told everybody about it, the market's moved. You're never going to get the same entry. By the time he's pressed that, he's gone, oh, it's moved. I'm out. I made 47 pips. You're like, hang on a minute, I haven't placed my order yet. Doesn't work, signal services. Rubbish. Long term, maybe, yeah. Swing trading, maybe. Trying to catch up on the chat. Which prop firm would I recommend? My Forex funds. So on my website, there is a trader funding page. I'll put a link in. You can compare all the what I class as the good prop firms. Obviously, there's hundreds of them out there now, but these are the main prop firms I consider to be the big boys. So E8, Fidelcrest, FTMO, Citi, My Forex Funds, the Fivers, True Forex Funds, and Surge Trader. Surge Trader made it on there because they've got a 365 daily limit. Other than that, they're 8 cap, which I don't like, but that I do. So you can have a look at all those. These are the big boys, basically, the well-established big boys with big bucks behind them that do fund you or have a massive marketing budget, so they're not going to disappear and go bust. You can filter by anything you like. So if you want one where you are forced to use a stop loss, go to Citi or Surge. If you're happy not to use a stop loss, you can use anybody you like, pretty much there. If you only want to use MT4, that gets rid of a couple. You've got max. Everything you would want to know about all the prop firms is all filterable there. So you can filter down to what's important to you, i.e. I want to be able to use EAs because I want to trade the opening range breakouts, for example. These are the guys. Some of them don't let you use EAs. If you're not worried about that, then you can use other people. But if EAs are important, you can filter it. So, but I use my Forex funds and E8, and for futures, it's Take Profit Trader. Those are the three that I personally use because that's the main reason for Take Profit Trader and that. For E8 and my Forex funds, they are the cheapest with a fixed daily drawdown. That's it. That's all I'm interested in. Every time I take an evaluation, it costs me money. Why would I take an evaluation that costs me more money than someone else's that has the same rules? And this is always my point about prop firms is these guys make $22 million a month in evaluation fees. They're one of the biggest firms out there. They are the cheapest out there, and they have the best trading conditions. Every prop firm that comes along has to beat these guys. If they can, fine. Other than that, why would you use anybody else? The only reason I like E8 is because they are the second cheapest firm and there's no minimum trading days. So if I need quick funding, I can go and take 3 or 4 evaluations with E8, trade it and get past one and get some funding under my belt fast if I need it. But I would only ever use them if I really need it or if they've got an offer on, which is why I've got an evaluation going with E8 at the moment to try and get some more funding because they got an offer on. Everybody likes an offer. But yeah, those are the ones I use anyway. God. Looks like we're frozen again. Would you recommend Take Profit? Yeah. Take Profit Trader, definitely. If you want to trade futures, obviously. The other thing about Take Profit Trader is they were going to introduce FX. They seem to have dropped that now. They were going to become, yeah, look, see, they still got it on the website. Stocks and Forex, and obviously crypto as well. But that is what they trade at the moment. These guys have got the potential to become the premier prop firm if they introduce the same rules as they have on futures, Forex. I think these guys are going to go far, but they're not set up for this. They're set up for futures. And futures is a very, very, very different kettle of fish. So, different. It's just different. But you can trade the opening, and that's what I do on futures now. At the moment, all I'm doing on futures is opening range breakouts. But you've got fixed lot sizing, or fixed contract sizing, so it's a lot more risky. Also, you make a lot more money. Lax, I'm funded with Take Profit trading futures. Oh, Take Profit Trader, yeah. By far the best at paying out, yeah. No one matches it. Exactly. And that's why I use them. Best payouts out there. Fastest payouts. This is what you want as a trader, yeah? So, you know, that trade I took this morning on the DAX. Yeah. If you've taken, let's say today is the very first day of having the funded account, right? And I go long on it and it flies and I go, brilliant, break even, let it run. Brilliant. I'm sitting on 2K of profit there. Okay, we get the news and it spikes up to 3K, right? On day one of having the funded account. What you need to be able to do as a trader is go, thank you very much. That is my mortgage paid. That is my bills paid. That is my car payment paid. Everything is paid. Withdraw that money. Stop. Withdraw that money. Take it out. Pay yourself so that you can live. Now get on with trading the rest of the account and see what happens, because your strategy or your system is reliant on market movement. When you get market movement, you have to be able to take the money out. If you are forced to use exactly the same lot sizes you used in your evaluation, and you have to trade for a minimum of 10 days before you're allowed to get a payout, And when you want to take your payout, you have to be flat and close all your positions, even though you've got 3 that are in 3.5% profit. But you have to close them, even though they're going to become 20% runners, because that's a rule of being paid. You can't trade like that. So all these things are put in place to slip you up. One of the biggest ones that most of the firms have is this 5 to 10 day minimum trading period. So you get in with a lucky trade, make 3.5%, and then you go, okay, I'll take a 0.01 for 9 days so that I'm trading so I can get to the payment. You will get an email saying, I'm sorry, you need to use a similar lot sizing to the original trades that you took. It's all written in the contract. You'll never find it though, because it's 50 pages long. Take profit trader don't do that. My Forex funds don't do that. So you just got to be very, very, very careful. Read the contract. That's the problem. That's the rule, basically. That's the lesson. I found this conspiratorial view of the market a bit off-putting. Which one was that? I don't know what I was talking about. Well, if you do find it off-putting, job done. Yeah, everybody in this industry is out to get you. As soon as you learn that, you'll start making money. CTO is trying to be like SMB Capital. I don't even know who that is. SMB Capital, not heard of that one. Take profit, not on your list of recommended prop firms. Yeah, they are, as I just covered. What about Apex? Yeah, they are. But you have to wait forever to get paid, which I've already covered. What's the name of the indicator on the bottom of my chart? This one, Relative Strength Index, RSI. Never traded futures. Can I explain the difference? The futures market is very complicated. In essence, the difference between trading CFD, so if you are trading the Dow, the contract name for the Dow is YM. Yeah. So ES is the S&P 500. NQ is the NASDAQ. So on the futures markets, things are called different things. They're named differently. You have to understand how they're named. And they are contracts. So you have a contract which expires at a point in the future. So when you enter, you are entering and you have to exit by the end of that contract. US dollar yen, 200% of ADR. Really? Wow. Missed it out too soon. This US dollar. Is that yen strength coming through? Please be yen strength coming through. Yen's powering up. So yeah, so you've got contracts. The other main difference that you need to understand with trading futures is every contract, every tick, every pip, whatever you want to call it, every movement in price from let me show you. That's the easiest thing to do, isn't it? Okay, so this is the futures market. So this is YM on the bottom, the Dow, and that is YM 5-minute. NQ is the NASDAQ. ES is the S&P 500, right? So on the Dow, I can buy the Dow now with one contract. Okay, so if I hit the buy button on the Dow now with one contract, you can see I am now $20 in profit, 25, 30, 35, etc., etc. See how fast this is moving? Every tick is $5 with one contract. You can't take anything less than one contract in the market. You can trade what are called micros, which will be 50 cents a contract, and you could trade 10 50-cent contracts. But the way that you enter the market is totally different. I cannot go long and short at the same time. If I hit the sell button, I'm flat. So it's what's called a FIFO market, first in, first out. When you enter a contract long, when you close a contract or sell a contract, you sell the first contract that you entered. Yeah. So you could go in long, 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 long. When you sell up here, you sell that contract. your average price moves around. The problem with futures is if you do this on the NASDAQ, let's just see what the NASDAQ is doing before I do this, because this is actually an account and I don't want to go nuts on it. So the NASDAQ, as you can see here, is trading here. So I'm just going to buy the NAS. You watch how quick the P&L moves on this. Right? $35, $5, $10, 25, 40, 5, 0, -10, -20, -50. Yeah, see how quick this is moving? Imagine trading this on a non-farm payroll. You would be $5,000 from $0 to $5,000 in 5 minutes. Less than that. I'm $105 in the hole here. Yeah? $70 in the hole. In profit. Close. $10 profit. $15 profit. So that's how quick it moves. This is what catches everybody out in futures. You can only trade a set contract size. And when you're trading that set contract size, every tick is worth $5, $7.50, $12.50, or whatever the value is, right? So when you're trading something like the NASDAQ at $5 a tick, and this thing moves up 1 point, you are $1,000 in profit. Like that. And this is what kills people. They can't get their head around the speed of movement in the futures market, which is why I say it's such an amazing thing to trade. If you get a contract, if I go long on the NASDAQ now, right, and we get a candle going like that, and I move it to break even, I will be sitting in something like $400 of profit. If I let this thing run for the afternoon and it decides to put in an ADR, I will withdraw $7,000 in an afternoon, just like that. But that can also happen against you. So you have got to be super tight with your stops. Your downside risk has to be limited so much more than in CFDs, because the amount of money you can put into the market is so much bigger. Yeah, you don't trade on CFD. We don't trade on here in your account with $5 a tick, do you? You go long, and if it moves from there to there, you'd be like $50 or whatever. Yeah, in the futures market, that's a car payment. Yeah, so it's a totally different way of trading, and it's also a lot more dangerous to trade. But it's cheaper to enter the market. So on, for example, Take Profit Trader, right? If you want to take an evaluation on Take Profit Trader, for a 100K contract, 100K account, it's $330 a month. You pay monthly. So if you want to take a 50K evaluation, it's $170. But these guys always offer discounts, so you never pay that. So this one, for example, at the moment, you get 40% off. So you can take 40% off of all these prices. So a 100K contract, $100,000 account is going to cost you something like $170 a month. But your daily loss limit is only $2,200. Yeah. And these guys are brilliant because you have what's called end of day drawdown, trailing drawdown, which is different to a lot of the futures contract players like Apex. So on Apex, if you started with 100,000 and it went up by $2,000 and then came down by $2,000 and you broke even on that trade, you would fail the evaluation because your trailing drawdown actually works as price goes up. Your trailing drawdown goes up. So if you take one trade and it goes up and then comes down, that stop out in profit can blow your account. The whole thing works totally different to normal trading. So you've got to really understand the rules. See, if I'd have stayed in that long, I'd be absolutely milking it now. Because I got in somewhere like that, didn't I? And it's moved all the way up to there. That would be somewhere in the region of $300-400. When I'm just mucking about here, I was just going to say I was just about to make $100, but okay, $110. So I just made $140. Yeah. So hopefully that demonstrates logic out the window, strategy out the window. With futures, you hit the button, you manage your risk. If it goes so far against you, you get out. Forget candlestick patterns. What goes up must come down at some point. But if that thing's gone up, it doesn't mean anything. The next candle will go wherever the next candle wants to go. So there's tons to learn about futures. You can't just jump into it. You can, and you can be very, very lucky with it. Yeah, I've just made $140. Just showing you how the thing works, right? It's that easy. It's also that I could have also lost $140 just as easily in exactly the same amount of time. So the best plays for me are always support resistance bounces. You will find in futures the support resistance is absolute key. And that is where you're going to make the most of your money. You will get in there, you will risk $400 and you will get out and you will take that money because that money will be the mortgage. Yeah, it's not like you can obviously replicate this in these markets, but you know, in here, in that 5-minute candle, right, hasn't gone anywhere, has it? But you've just seen me make $140 on the Dow in futures. I just traded within that candle and made $140. It's that fast, and that, you know, it's just a totally different thing. So it's good fun. And it's also massively profitable. But there are ways you have to completely change your view of risk. It all is so different. And speaking of Dow, this is absolutely going nowhere today. So forget it. Unless you're trading futures, obviously. And you've also got a lot more rules. You cannot trade futures over the news. You've got to be out of the futures market 5 minutes before and 5 minutes after news. You cannot trade non-farm payroll. It's suicide. I have watched non-farm payroll. I've traded demo account. If you want to try it out, go to FTMO. Use FTMO. Because FTMO will give you a demo account. Actually, I think Take Profit give you a demo as well, don't they? I've got, well, FTMO definitely do free trial. If you want to try it out, go and use them. I've traded non-farm and news events on FTMO demo accounts over the news. And literally, you press the button before the news and the news comes out and you're sitting in $25,000 of profit. That's why they don't let you do it, because they can lose $25,000 like that. And if you get slipped, the order execution in the futures market, the other thing you need to understand about the futures market as well is the market makers get preference. So when you look at a ladder, an order book in the futures market, all works on a ladder. You can see what's called depth of market, which is the bid and ask prices and where people's orders are positioned. There's lots of stuff you can do. I use a piece of software called Jigsaw, which allows you to see every order in the market. So basically, you can see where the big orders are placed or the whales, and you can use that to your advantage. But when you're trading on the ladder, the speed of movement that you see this thing going up and down is absolutely incredible. And if you don't know what you're doing in it, you're just going to get absolutely destroyed. But you need to learn how to trade futures. It's a totally different mindset. So go and play. And you know, just when you're trading, just understand that every trade you take, you are the back of the queue. So if you saw 100 contracts at a level and you decided, I want to go short at that level, you would become contract 101. If the market makers decided to move that down to this price level, your contract would never get executed. So when you get big news events, you've just saw the slippage I experienced there, yeah? I had a break-even stop and I got slipped down to there. That's in the CFD market. In the futures market, you would get slipped until they decide to execute your order and you have no control over it. So your money can disappear infinitesimally in effect, because the market makers at the Chicago Mercantile Exchange get preferential treatment to jump the front of the queue. all the time, in the same way as the banks do with CFDs. Different. Go and play with it. You'll soon discover if it's for you or not. Just catching up with chat. My swaps have stopped me from getting out of euro yen. I think I should hold out until it covers the swaps, even though you're at break even. Yeah. Obviously, take into account everything. That's the only problem with holding long term. That's the only problem with position trading in general, really. There's the swaps on a squeeze. The swaps will build up, and you'll see the break even line. You'll get to your break even line, and you'll find you're not actually at break even because the swaps aren't taken into account. So hold on a bit further. For futures, ICT trading method works very well. Not going to answer that. Ninja Trader, that was Trader8. But yeah, the three main platforms are Trader8, Ninja Trader, and people either use Bookmap or Jigsaw. I use Jigsaw. You can also use TradingView as well. So that yen strength is waning a little bit. Good move, though. Buyers are buying up the low, though, today. If you were looking at this on the futures market, if this was a futures market, what you would see is a big block of orders sitting at this level, which are basically what we call iceberg orders, which is basically limit orders, if you like. So the market pushed down, it pushed up. As soon as it pushed away from there, all the buyers added limit orders at this level. So if the market came back to it, they would trigger limit orders to keep the market flying upwards. You get to see all of that in the futures market. That's the advantage. You are an open book. I'm going to go sleep so I can study. Good luck. See you in a couple of weeks. Wayne, yay, R2500 for the week. No lot size large than 404. You've completely changed my way of view of the markets. Cool. So you've made 2,500 Rand, I presume that is it? Good job. Satan's flip-flop. Please answer. You can't trade the futures with no stop. That is suicide. Yeah, totally. I just don't believe in ICT methodology because it's just... Prove me wrong. Show me one person on the planet, including ICT, that has ever traded ICT profitably. And I will roll over and say it's brilliant. But no one can show me any way of making profit with it. So it's just another strategy like everything else. The stop run or the liquidity run, whatever you want to call it, is literally limit orders placed by the banks. It's all the same stuff. It's support and resistance. It's been around since the year dot. Can you show me the S&P chart on the 1 minute? There you go. I wouldn't trade the 1 minute though. Very dangerous 1 minute because all you're doing is trading chop. So market structure, you'll find you'll get a lot of alerts on the 1 minute chart, but you will find a lot of invalidation as well. So for example, you had a reversal alert there, which invalidated because you're seeing order execution, which goes like that. There's no market structure. Yes, the market will move up and down with order execution, but it's not moving up and down because market structure is showing you where the banks are placing orders. It's moving up and down because the banks are placing orders. You're just seeing it executed minute by minute, which is not really conducive to trading. So, because you're just trading random chop, basically. But again, nobody makes money that I know on the 1 minute charts. Everybody shows lots of videos and lots of perfect examples of trades on the 1 minute chart, but no one trades the 1 minute chart that is consistently profitable that I know anyway. But then again, I'm just me. You know, I've been around for 15 years. I haven't met everybody. So maybe all the people that are making that money are sitting there very quietly, just making money and being quiet about it. Normally people tend to shout about it when they make money in the Forex market. So I thought I would have heard. He doesn't explain everything. That's why using day profiles is what he hides. He doesn't hide anything. Don't be sucked in. The guy sells courses, right? Want to say, I like your channel quite a lot. Good. You want to say it? No, you can say it. Say it. I like your channel very lot. What is the grey shade? So this indicator is called support resistance propulsion. It's one of my indicators, that one. And basically it plots propulsion gaps, which are, this is the wrong time frame to look at. You want to look at the hourly. So propulsion gaps basically are large orders placed in the market by the banks and institutions. So when you get an accumulation and the banks have built an order, they move the market fast and hard in one direction. You get a propulsion candle, and a propulsion candle is literally just a large candle, a big move, which is a large batch of orders being executed in one direction. So that leaves a propulsion gap, propulsion candle. And if the market pushes up and then does not trade back down and creates an efficient market, it pushes up again, you get a gap, which is these. So this is basically an accumulation. The banks bought that level. Yeah, they came back, they added to their positions and drove the market higher, which means that there are institutions left offside here. It's what the market calls unfinished business. Again, you'll hear all about this in the futures market, unfinished business. So when you get unfinished business, the banks and institutions that have positions wrong-sided during those propulsion moves, which is basically one bank executing a 10 million order and another bank having a 5 million order and getting run over, they do not stop out on that position. They add and average in to return to level the books. Unfinished business becomes finished business. Grey areas of finished business. Unfinished business, if you like, propulsion candles, are targets. So you'll see in any market you look at, you'll have propulsion candles and the market trades back to those levels. Every time it leaves a propulsion candle in place, it comes back and trades back into it. Yeah. Propulsion, filled, propulsion, filled, propulsion will fill. Yeah. So the grey ones are basically targets that are reached. It will also orphan every now and again. So from a position trader's perspective, the way that you use these is you target them. So for example, CAD yen. Okay. So I've been short the CAD yen for a couple of weeks. Got in here on the H1 RSI extension. Target would have been that propulsion gap. Yeah. The market then pushed away and made a new propulsion gap. So I take that entry and average will be profitable if that propulsion gap gets filled. The market pushed further, so I added more positions. Target is still that propulsion gap. And as it pushes away, it makes new propulsion gaps, new targets, which we target to fill. So I got out here, which is in between these two propulsion targets. So you can see that this propulsion gap here and that propulsion gap there are now filled. So they've turned grey. They were blue. So I'm out. Yeah. So now where we are, if you're going to go long, you've got targets to the upside there, 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 and there. If you're going to go short, it's going to go down to there. And it will fill one of them. You don't know which way the market's going, though, because if you knew that, you would have 100% strike rate. You don't. So whether you're getting long or short, you know where the market's headed. The market is headed to the unfinished business. That's all it is. A propulsion gap is literally a large candlestick. But a large candlestick, if you know what is going on under the hood, is the banks and institutions executing a large order, which leaves other banks and institutions offside, needing to get back to that price level to balance their books. Every buy has to have an equal sell. Yeah. If you get a large candlestick, which is only buyers, there is an uneven amount of sellers. They're called the original kind of inventor, if you like, of these is a guy called M.A. Perry, and he called them wide range bars because he used to trade line charts like that, the candlesticks, which aren't candlesticks, if you like. So open, close, high, low candles, or bars, range bars they're called, aren't they? So he used to trade those candles, whatever they're called. So basically, the reason he called them wide range bars is because they are a big, wide ranged bar. That's your range, that's your low, that's your high. So if the market pushes up and leaves, and then pushes up again and leaves a little bit of a tail and pushes away, that area there, nobody has traded in it. So there's only buyers, there are no sellers. The market has to go up and come back down to be efficient. When it goes up and comes down to there and then pushes up, that area is full of nothing but buyers. Everybody offside there will be pushing back down. So the banks and institutions will push back down into those areas, which is what we call market structure. Buyers have to sell to make profit. So what I do is wait for the buyers to push, and then as soon as the RSI gets extended, I know that they are ready to take profit on their order. So I get in short. Sometimes you will get squeezed and one of the banks and institutions will make a run. But if they want to exit that position, they have to become sellers. So the cycle starts to the downside, which again goes back to what Steve Mauro was saying about buy cycles and sell cycles. It's all the same stuff. Market structure. You go up, you come down. 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 So as long as the market does that, I will always make money because I don't use a stop loss, so I don't get stopped out. So if I don't get stopped out, I just wait for the market to come back into my favor. Not in the futures market, obviously. And the other thing about the futures market, Amy, if you're still here, is you have to be flat by the end of the day, because to hold a futures contract overnight will cost you thousands of dollars. So you can't hold overnight. Intraday only. But if you want to know more about that, there's a video on the website. Just trying to think where it is. That one there, propulsion gaps explained. That one tells you all about. Actually, probably the best one is the one about the indicator, because that explains it in more detail, I think. But yeah, that page is probably the best one. Watch that video if you want to know more about them. So ORB today is dead. Not going anywhere. Just curious, do you prefer futures or Forex? Forex. Futures sounds like gambling. Everything is gambling. Everything in this market is gambling. When you press that button, you put money on the table, you are gambling on the fact that the market will go up or down. It's just in the futures market, it goes up and down 10 times faster. So you need to have your wits about you. And you need to be very resilient to loss, because you will experience a lot of it. And it's not, as you just said, it's not easy to earn consistently in futures. In prop anyway. The trouble with futures is, and this is the crux of futures, the guys that make money in the futures market are the guys that have the big pockets. So they have the power to drive the market. If there are, and again, you'll see this on a ladder, if there are 100 contracts sitting to go short there, 100 contracts sitting to go short there, and I am a whale in a bank, I can basically buy those 200 contracts by entering myself 400 contracts long in the market. And I will eat those 100 orders, and I will eat those 100 orders, and price will now be trading here at whoever is wanting to sell 100 contracts. What have I just done? Moved the market up. If I've bought it here and moved the market up, what am I in? Guaranteed profit. This whole industry in futures is run by the whales, the banks and institutions, because they are sitting on a pretty much endless pot of cash, and they can just hit the market, hit what's called hitting the bid in the market as many times as they want until everybody selling goes, screw this, I'm out. And then it ticks up. As soon as it ticks up, they've made money. So in the futures market, what you're doing is anticipating where the whales are sitting. The whales will be sitting wherever the market moved from, because that's where the whales moved the market from. Yeah. The reason this hit that level and pulled back is because somebody entered a massive sell order. When it pushed up there, that guy entered a massive sell order. When it pushed up there, that guy entered a massive sell order, because every time he enters a massive sell order and it ticks down, he makes profit. In the futures market, if you use tools like Jigsaw, you can see every single order. You know where the whales are. They're called icebergs. You hit an iceberg, you bounce off it. You hit an iceberg, you bounce off it. You hit an iceberg, you bounce off it. You can see the icebergs. You've got a much higher probability of knowing where the bounces are going to happen, which is what you do in the futures market. You've got to be so disciplined and sit there on your hands and go, I'm not going to hit that button until I see a level that I think it's going to bounce from. Because when it bounces from there, that's going to cost you $500 to $1,000. So you need to make damn sure that that is a good spot. Because as soon as it's down here and you're sitting on $1,000 in profit, yeah, you are going to want to break that even as fast as you possibly can, because that run down to the lows there is going to make you 10 grand. As I say, it's a totally different thing. But all trading is gambling, isn't it? When I hit the sell button, the odds of my trade working are 50%. Every single time you press that button, the odds are 50%. It's either going to go up and it's going to go down. Those are the only two constants in trading. It's going to go up, it's going to go down, and it's going to move through time. That's all we know. So everything's a gamble. Sorry, bear with me 1 second. A delivery. What's the lowest time frame to see market structure? Well, market structure is visible on all time frames. I mean, everyone has market structure. Yeah, market structure is all market structure is a series of highs and lows. Yeah, so you've got a low, a high, a low, a high, a low, a high, a low, a high. Yeah, as long as it's making higher highs and higher lows, market structure is bullish. When you make a low and then a lower high and a lower low, that is a break in market structure, which is what the reversal alert indicator shows you. That is a structure reversal. So it happens on all time frames. This is minute chart. There is a market structure reversal. Then it flew down. We're waiting for the next one to go long to buy it. But on lower time frames, you're seeing algorithmic orders and algorithmic chop. So the reliability of any signal you take on a lower time frame is going to be way lower than a higher time frame. So me personally, I don't trade anything less than 5 minutes. In here, in that period there, 1, 2, 3, 4, 5 candles, 25 minutes, you may have had 4, 5, 10 reversal alerts trigger on the 1 minute chart. Well, no, you wouldn't have had that many. Maybe you would. No, you wouldn't have had that many. You only had 25 candles, so you probably had 3 or 4 signals in that one signal. So as you go up time frames, that chop gets smoothed out. And then you go up to the next time frame and it gets smoothed out even more. There's no reversal alert there because we're trading bigger swings. Yeah. The bigger the time frame, the more reliable the signal will be. And you'll have less of them. So market structure is visible on all time frames. The market's a fractal. So everything that happens on the high time frames happens on the low time frames and vice versa. But I don't trade anything less than the hourly. So all my analysis is done on the hourly and the 4-hourly charts and dailies. My entries will happen on M5, but I'm trading the hourly. So I trade what's called H1 M5 mean reversion. So I'm waiting for H1 RSI extensions to enter on an M5 reversal alert. This is all explained in the bootcamp on the website. Just go and watch all this, it'll explain it all. The first video is about, the second video is about multi-time frame analysis, which is basically using a higher time frame to identify market condition and then using a lower time frame to enter on that market condition. What's the name of this indie? Oh, I don't know which indie it is. There's lots of indies. Gavin, propulsion gap, ICT calls it a fair value gap. Sounds like it's not his concept. No, it's not. Nothing ICT does is new. It's renamed. There aren't enough characters for me to go on an ICT rant, as Brian's just said. I have nothing against ICT at all. It's just that nothing he teaches is new. Yeah. Support, resistance. Again, like you've just said, he calls a propulsion gap a fair value gap. I call the propulsion gap a propulsion gap. The reason I call this movement in the market a propulsion gap is because my mentor, who made me break even, taught me about propulsion candles. A propulsion candle is a large candle. Some people call them strong close candles. Some people call them impulse candles. Some people call them propulsion candles. When there's a propulsion candle followed by a propulsion candle, it means there's been a large order placed by the banks, which leaves an area of unsold or unfinished business. And again, unfinished business is something that was taught to me in stock trading 10 years ago by somebody else. I've coupled everything together through other people, basically. That's what everybody does in trading. This concept was created by, as I said, M.A. Perry, and he called it the wide range bar. ICT calls it a fair value gap, but I don't know what ICT's definition of a fair value gap is. My definition of a propulsion gap is a bloody big candle that hasn't traded back the other way. That's it. M.A. Perry's definition of a wide range bar is a long, big candle that hasn't had anything traded back there, but this has to be larger than the preceding 3 candles. So a wide range bar is different to a propulsion gap. What the definition of a fair value gap is, I don't know. Maybe a combination of the two or something else. Doesn't matter, does it? At the end of the day, what you call a big move in the market is entirely up to you. At the end of the day, the banks for that hour sold a hell of a lot of CAD yen, and then they sold a hell of a lot more CAD yen. So if they've sold that much CAD yen in 2 hours, the chances of them adding to that order to drive the price down are high. That's why that is drawn on the chart. Use it any way you wish. All it is a big blue block indicating that there's been a large sell. Call it what you like. Call it a big blue bar. I don't care. It's an order. And it's come from a previous level of resistance. Everybody in this industry teaches exactly the same thing in a slightly different way, and they call it something new. But what they do is they charge you $1,000 for it. That's the way the industry works. I've got a video on that on the website if you want to go and have a look at it. It's this one. It's brilliant. You'll watch it and you'll go, oh my God, really? Where's it gone? I don't think it's on here. Did I put it on here? Yeah, it is. Stop buying trading courses. Go and watch that. You'll love it. Basically explains to you what you've been doing for the last 5 years when you've been buying courses, why you haven't learned anything yet. It's the same thing, Gavin. It's not a concept, it's a thing. It's just a name, yeah. I have no problem with anybody in trading, in the trading world. They're all doing the same thing. But most of them are charging stuff. They're charging for education, and that's what I don't like. Only because I bought it all over the years and spent not tens of thousands. I don't know how much I've spent. Couldn't I? would never want to tot it up, but I've done all the courses. They all do the same thing. They teach you the same thing. The market moves up, the market moves down. They teach you a way of putting an order in the market based on a rule with a stop loss and a take profit. When you realize the reason none of them work is because you place an order to lose you money in the market, that's when the light bulb hits. As soon as you stop placing the order that loses you money, there, and there, as soon as you stop placing those orders, which would have lost you 1, 2, 3, 4, 5, 6, 7% of your account, you realize that you could make 3 or 4% if you just let the thing come back down your way. And go and prove me wrong, but everything in the world does it constantly, over and over again. And it has done since the 1940s. The market goes up and down. Why would you place an order in the market here that loses you money, here that loses you money, here that loses you money, when you could just wait for the thing to come down and make a profit? Nuts. That's what every course teaches you. And that's why everybody loses money. It's really simple. But everybody that's been in here is bored of me saying that. But it's also always good to reinforce. It's the same thing. Yeah, I've read that. He is strange. He almost suggests he coded it. What I think he's saying is he figured it out. Oh, ICT you're talking about, are you? I can prove he didn't code it. If you're talking about fair value gaps, go to this website. Oh, God, I don't know the name of the website. I'm going to have to look it up. Not M.A., not Matthew Perry. Strategy Lab. Yeah, right. Look at this website. This was built when Google was employing 5 people, right? This is Mr. Perry's website, the guy that is responsible for the wide range bar theory. Do you think he was trading before or after ICT? I'm going to go with probably before, because YouTube is when ICT became famous. YouTube was a glint in Google's eye when this website was built. This guy came up with the concept. So anybody that, and I haven't come up with the concept. This guy did. But I didn't learn about this from this guy. I learned about it from another guy who probably learned about it from this guy and called it a propulsion candle. All that guy did, Mr. Perry, was identify that when a bank makes a big move in the market, they tend to retest it. That's all he did. He came up with he was looking at charts going, hang on a minute. Why is it every time it does that, it always comes back to where it started? Light bulb. That's all he did. Really easy, isn't it? But obviously, he doesn't sell it. Others do. Anyway, like I said, I haven't got a problem with anybody in this industry. I just can't be bothered with it anymore, I think, is the honest answer. So retest of a propulsion gap is valid. I am 3 old fashions in on a Friday night, Gavin. Position trading has changed my P&L. Good. That's the idea. Position trading, that's what you need to do. Position trading. I'm obviously biased, but call me old-fashioned, seeing as you're drinking old fashions. That's the way I make money. And it's the way the banks make money as well. You know, that's the thing. I'm not clever, right? What I've done is I've followed people over 15 years that have made logical sense to me. I'm a programmer. So I like logic. If someone can't show me something logical and can prove it, I'm not interested. So all I've done is looked at everything that everybody's ever told me and has never, ever worked, and taken all the bits out of it that I thought, actually, that looks okay. Maybe we can cobble something together. And then removed the thing that someone else taught me was why I was losing money. And that person worked in a bank. And he said, you'll never make money if you put an order in there to lose money. You're nuts. And I said, why? Everybody teaches you to do that. And he said, yeah, of course they do. That's why we make money. Light bulb. The banks make money because we put orders in there so that they can take the money from us. Stop putting the orders in that take the money from us, and all of a sudden we become the banks. Very simple. But nobody wants to buy a course on that because obviously it's nuts, because that's what no one else in the market's doing. That's why 83% of people lose money, as Axie tell us every day we go on their website. 83% of the market lose money when they trade with this broker. So what are the other 17% doing? Certainly not using a stop, are they? Or if they are, they're certainly not trading the 1 minute and the 5 minute charts. They're trading proper time frames like H4 and daily charts, where you're not going to get in here with a stop loss here. You're going to get in here with a stop loss here. And the chances of it hitting your stop loss is a 3-day move against you. But that's too slow for most people, isn't it? We're not interested. So everyone wants to trade the 1 minute chart because you can make 500 quid in a second. Satan's flip-flop. Gavin, ICT refers to that as inefficiency, and that price will come back and level it out. The market has been there longer than ICT. He didn't code it. But he's identified it. You know, this is why I don't really have a problem with ICT's methodology, because it's right. Yeah, what he teaches is right. Well, some of it is right in the fact that he has identified market movement. But he has identified market movement. Market structure was invented years before ICT entered the scene. This was invented years, not invented. This has been there. No one's invented anything, right? This is a candlestick invented by the Japanese back in the 1800s. They used to use them to measure the price of rice. Yeah. There's been big orders in rice for centuries. That's what that is. It's a big move. That's all it is. Call it what you like. Yeah. Nobody built, coded, invented, or identified anything. Observant people can see what's going on. That's all you need when you're trading, is you need to be observant and observe stuff that's gone on in the past. The reason I use the RSI is because when I was doing Steve Mauro's course, I identified that the TDI indicator that he used was based on the relative strength index. So I stripped all the crap out on top of the TDI and went, hang on a minute, it all revolves around the RSI. So let's have a look at the RSI. And I observed the fact that when the RSI gets above certain levels, it pulls back. Am I clever? No. Am I observant? Yes. That one didn't work. Oh, the RSI's crap. Throw it away. Hang on a minute. Just wait. It's 100% strike rate there if you don't use a stop loss. That's all I've done, is I've observed something in the market that repeats itself over and over again, and not just on this instrument, on every instrument you can trade. Go and do it yourself. There's a video on the website about RSI and backtesting the RSI. Why I use it? Because there's very few indicators out there that show you when the banks have moved the market. This one does. It shows you when there's been a relative strength move, which is very strong in one favorable position on the banks, who leave behind areas to target. That's the other thing I need to say about these. If there is a fundamental shift, i.e. a news event which changes the market profile, i.e. the banks and institutions were short on something, now they decided to go long because the scorecarding has changed, these will be orphaned. So you will have ones that don't work. But when they don't work, what you do is you scale in and wait for the ones that do. Because if that one doesn't work, that one will. If that one doesn't work, that one will. If that one doesn't work, that one will. There we go. Yeah. So you are going to find, again, like in trading, everything, there is nothing that's 100%. This will fail. Not very often, but it will. So you just need to manage the trade after it's failed and make sure you have an opportunity to get out. Is position trading also called hedging? No. Hedging is taking two trades on the same instrument in opposite directions. So what position trading is called, some people, banks and institutions call it dollar cost averaging, or DCA. Yeah. So DCA is what the banks do. You'll hear this if you go and watch the Bloomberg channel. Bloomberg is all about stocks, right? But you will find the interesting thing about Bloomberg is everybody on Bloomberg works in an institution, a big bank, an investment house, a pension fund. The guys with all the money that make this thing move up and down. If you listen to what they say, you will really easily identify what they do. Yeah. Virtually every hedge fund manager and institutional trader they have on to interview on Bloomberg mentions the word DCA, or dollar cost averaging, at least once a day. Why do you think they mention DCA all the time? Because that's what they do all the time. Position trading is exactly what the banks do. You get into a buy here. If it goes down, you get into a buy because you are positioned long. So your average price at the moment on this trade is here. If I enter one here, my average price is there. My dollar cost average is in the middle. So all I'm doing is I'm changing my entry price as the market moves against me. So I'm bringing the order entry price that I've entered my position in somewhere else. Yeah. So if you take a long here and it goes wrong, you stop out with a loss. If I take a wrong here and it goes wrong, I move my entry price down. That's a big advantage, being able to move my price. I was wrong there. All right, well, I'll move it down to there. I'm still wrong. I'll move it down a bit more. I'm wrong again. I'll move it down a bit more. Eventually, I'm going to be right. That's what DCA is. That's what banks do and institutions do. Position trading is exactly the same thing on a much smaller scale because we're not banks and institutions. The advantage they have is they can move the market. We can't. So we have to wait for them. So our job as position traders is just to identify when the market is likely to be moved by the DCAs. And that's what this indicator helps with. So when we see something like the pound yen moving like this, we know that they have to take profit on the position. So my initial entry was there, then it was there, average was there. Then it was there, average was there. Then it was there, average was there. We pushed along to the sideways. We went up a bit more, entered a few more trades. Now my average is this red line. I'm in profit, virtually, break even. But that's where I entered totally wrongly. So I just moved my price up. Then I moved it up again. This is this is a worst case scenario. What we're looking at on the yens now, this squeeze on the yen is abnormal. So this is the worst case scenario you're seeing on the screen here. The worst case scenario is I've been stuck in this for 3 weeks and I'm at break even. I haven't lost any money. I have. I've scaled out a few times on it. I've used a couple of drawdown controls. But when this pushes down to here, this whole thing, let's give you another example for those that aren't familiar. This Aussie New Zealand trade here, I entered there. I was wrong until here. I was out. That's how much money I lost on that entire 4 week in this case, wrong trade. I lost 1%. Yeah. This is what the banks do. If you think about it, if you're a bank and you're entering a long or short position, you're not entering with $20, $50. You're entering with $20,000, $50,000 of risk per entry. Do you think your bank, your manager is going to allow you to go, actually, that went wrong, boss? It's 100 grand. Oh, okay. Don't worry about it. It's only 100 grand. No. He's going to tell you, right, we're going to move the market down there because we've got a load of orders to process on the commercial desk for the Australian dollar on Monday. Make sure you're positioned to get out. That's what they're doing. They're not losing money. They're positioning themselves and getting themselves out because they can move the market up and down. We can't. So we have to find their footprints. That's what we do. That's what's taught in the bootcamp. So it's nothing to do with hedging, to answer that question in a really long-winded way. Brian, when I started in 05, I was taught that price expansion was considered a gap in price. Yeah, propulsion. That's why I use the word gap. That's the same thing, yeah. Expect it to return and fill and then continue, gap and go. Yeah, stock. That's a stock term. So when I used to trade in the stock market, I was trading gap and goes all the time, especially on earnings. So earnings plays would be either a gap and go or a VWAP fade, or a VWAP fizzle, as it was called. So a gap and go would be either a gap and go or it'd be a gap and go. That is a propulsion move, and in an earnings play, that will be a gap in the market. The principles on all you're doing when you're looking at anything is you're looking at a chart of price. It's the same thing. If you take the price column away and you take the time frame away, right? You're looking at this thing. Your job is just to identify patterns in this thing. And figure out how it works and what happens. So stuff that's repeated itself for 50 years is unlikely not to continue to repeat itself, because as long as there is greed, there is people wanting to buy and sell stuff, they will want to buy it at a price and sell it at a higher price. They want to sell it at a high price and buy it at a lower price. As long as that condition exists, i.e. we have a market, a buyer and seller disagreement, this thing will move up and down. That's never going to change. The thing that is going to change is the time frame you look at will give you a different view. So at the moment, the Aussie New Zealand is range bound. No, it's not. It's trending down. No, it's not. It's coming out of an uptrend and it's in a pullback. No, it's not. See, that's all that changes. This thing is the only thing that changes your perspective on the market, but the market does the same thing all the time. The only constants are it goes up and down and moves through time. That's the only thing we know. And look at this. Exactly the same thing plays out on all time frames with the relative strength index. It shows you when there's been a strong move. After a strong move comes a profit take. We just need to identify when the strong moves have finished and then use the bank's profit takes as our entry. So we're getting in on the coattails, because what we can't do is predict the future. We can see the past. So if you're going to use past information to predict future price movement, you have to know how the market works. And as long as it moves up, it comes back down again. So all we need to do is know when it's moved up. You can't time that. And that's where the dollar cost averaging part of the trading comes in. Because we can't time the market like the banks, we just have to wait. Look how wrong I was there, look. Bull candle. You couldn't have got that any more wrong, could you? That's the worst entry ever. And I lost 1% on the entire thing. I was wrong for a month. There's very few courses out there that will teach you it doesn't matter if you're wrong or right. And that's the advantage of position trading and why we do it, because it doesn't matter, does it? I can't time the market. I've accepted that and I've admitted it. I'm crap at trading. I can't time any entries at all. So I will just make money out the market regardless, because I can't do it. That's basically what I'm saying. Neither can the banks. What's the difference between the grey colour and the blue colour on the propulsion candle lines? I've already explained that one. So these are just areas that haven't been tested. So you can see here, this grey one was blue yesterday. Yesterday, price came down and passed through it. So basically, all a blue line is, it means that we have not traded through it. So here, yeah, this one is still blue. Why? Because that candle high did not go up above that line. So this one here, if price had pushed up above it, that would be grey, like this one. Look, there's one. Price closed down below it. So it's grey. It's done. We haven't closed the loop, if you like. So somebody entered an order long there. We haven't got back to that price. So there is unfinished business there. Now, that unfinished business may have been written off. Has been written off, probably. Yeah. Banks and institutions do take losses, but they do not take losses because price has moved into a position. They take losses. They close out trades when they've made enough profit. Yeah. So if this thing pushes down and they get an order there, which is the wrong way, they're buying it, and it pushes down, they will also be selling it. If you enter 3 sell positions and it moves down to there, the total of those orders is greater than the loss on that one. So that profit outweighs that loss. So you write that loss off. Unfinished business is written off. The write-off. This term you probably heard. So that is basically why that is blue, because there is still unfinished business there. But I class that as closed. It's done. Yeah. So like this one here, it's done. So we moved down, pushed up. Like the higher that candle is there, the higher the propulsion gap is there. It's done. So I would class that as we've closed it. So that's done. That's pretty much done. So there's not really targets to the upside at the moment. However, it's been dropping for 3 days. So everybody that's been selling this is probably want to get out of their positions. What do they need to do to get out? If they've sold it, they need to become a buyer. So when you get a structure breakdown here, take it. We don't know where it's going to go, but if you get in here and you get out there, you make money. If you get in here and it pushes down to there, get in again, wait for your average to get hit and then get out. Nothing is cut and dry. As I keep saying in here, if you're obviously new in here, but you'll see this slide come up regularly. You haven't got a crystal ball. You cannot predict the future. Every indicator, every strategy, every EA you have is trying to predict the future. No one can predict the future. None of my indicators that I use or I created or I sell can predict the future. They tell me a piece of information about the market. Put them all together and I have an idea that something is going to happen in the future, but I can't time it because I haven't got a crystal ball. If I had a crystal ball and I knew which way the market was going and when, I wouldn't be sitting here, would I? I'd be sitting on a beach with a laptop and going 25 past 2, buy, sell. There's 2 million. You can't do that. You have no way of knowing what is going to happen next. Because this candle is green, has absolutely nothing to do with the next candle that's going to paint. That candle that was green, everybody bought it because it was bullish. What happened? It collapsed. What happens on that candle has nothing to do with that candle. The past is the past. Today, right now, this thing is going to go up or down. I don't know which. Which is why you saw me in the futures market earlier, press the button long. You flip a coin and press it short. I still would have made money because I pressed the other button when it was in green rather than red. That's the only reason I made money. If I'd have used a stop loss on it, I probably would have lost. Do you have a Lambo? No. Because I make lots of sense. No. Good one. You can't make money. You can't make Lambo. You can make Lambo money, obviously. But you've got to have Lambo money to make money. So if you've got Lambo money, you can buy a Lambo. So you don't need Lambo money to make money because you already got a Lambo. If I had $1 million, I could easily make 10, 20 grand a month. No problem. Because what is that? 1 to 2%. I could make 1 to 2% by basically flipping a coin, getting my dog to put his paw or her paw. I could put 2 coins on the floor, one heads, one tail. Get my dog to go and press one of them and then click the button in that and then wait for the market to come back in my favor. Because I've got $1 million. If I enter with a tiny little 0.01 lot size, I could just wait for it to come back so that I can close it out with 5 grand, 10 grand profit. Greg Secker has one. He does. And, it's the same, same with Greg Secker. Why do you think he's got that house, that pool, that jet, that car? Because he owns the most successful trading education company in the marketplace. If I owned a trading education company that turned over multi-millions, I would have a Lamborghini. Because my company that teaches people to trade makes a lot of money. Have you ever seen him make any money online live? Have you? I mean, I haven't. I don't know. Maybe he does. I don't know. Unless you're doing it on here live and everyone can see and track everything you're doing, nobody in this industry makes money, which is why I'm on here every day, twice a day, showing you the P&L. Because that's the only way to convince people that this can be done, as far as I'm concerned. No one's done it in 15 years that I've ever seen. If I had, actually, they have. 2 people have done it, and they're still going today. And they're both people that I've learned from. So there you go. Or do the Mamba. Yeah, do the Mamba. Fake gurus. I mean, this is the thing. But who's the idiot, right? The guru or the person that follows the guru? I have to ask that question, because for years I bought courses from people that said they knew how this thing works. They said they had an indicator or an EA that made this thing work. They said that they could teach me how this thing worked. None of them ever showed me a P&L. Who's the idiot? Me. Because I was the one that was following these people that told me they knew what it worked. Not once did I go, can you show me your P&L? I never asked that question. If you asked that question, do you think you would ever get one? I don't know. It's just, you know, it's interesting, isn't it? We kind of have this conspiracy theory about all this industry and what goes on in it, and all these educators and how they're all fake gurus and stuff. But has anybody ever asked for the information? It's like a freedom of information request to Greg Secker. Could you please show me your P&L for your trading account? He would probably turn around and go, no. And he's well within his rights to do that. If he turned around and said, yes, these are the trades I've taken live every day for the last 6 years, I would buy his course, because he's proving it. You know, just, we don't ask the question, do we? For some reason. I don't know why. If time was no issue and the trader, as the trader, we did not care about time, would more than 0.5 ADR be a valid target? Yeah. Any target is valid. Seems like I'm taking profit early when the drawdown time is long. Yeah. But that's the nail on the head, Gavin. You're taking profit, right? A 0.5 ADR profit. So if you get in long here and it moves up to there, you take a profit of half an ADR. 1 ADR profit would be there. You've taken a profit. If it goes against you and you sit in drawdown for 3 weeks and then it comes back and you take a profit, you take a profit. The difference between position trading and normal trading is the elimination of the losing trades, right? So one of the reasons I pursued this path, first reason was because somebody in banking told me that I was an idiot and this is how they did it. And the second reason, which I've completely forgotten because I said the first reason, hang on. What did I say? Taking the loss for the time. I can't remember what my second reason was. Gone out of my brain. But yeah, the reasons I pursued position trading was because identified. I don't know. I can't remember what I was going to say. I was going to say something really profound that was obvious, but it's so obvious I've forgotten what it was. But the waiting time, yeah. I mean, the difference is with position trading is obviously you are taking a profit. That's the difference, isn't it? Yes, we do have to wait because we can't time the market. If you stop taking profit at half an ADR, right? Look where I got out on Aussie New Zealand. Look where Aussie New Zealand is now. I don't even want to measure it, but I got out there. It's moved 223 pips on a 68 ADR. So that's 3.5 ADR beyond where I got out. The reason I got out was because I had in this case, it actually turned out to be a minus 1% loss, mainly because of the swaps. But this propulsion gap here was the reason that I got out, because I was expecting a bounce off propulsion because we got one before. So if you are in a position, look at where it's going. So you don't have to take half an ADR. Take whatever you want. Just understand that closing out in a profit is closing out in a profit. Being in drawdown for ages is part of the game. Your account is there to be drawn down into. That's the whole point. half an ADR is a valid target because it's easy to achieve, because we know that 58% of the time the market spends inside of its average daily range, inside ADR. That's what the ADR dashboard tells us. Now, look at these ones that have hit ADR today. Look at all these ones that haven't, because the market spends 58% of its time inside its average daily range. So if we target within inside of an average daily range of movement, we will hit it regularly. That's why that there is an easy TP. That's actually one ADR, double half an ADR. But the reason that target is there was because there's no valid targets from that entry until that one, that propulsion gap. So right now, if you go long, that's a valid target, that's a valid target, that's a valid target, that's a valid target, all that's all valid targets. How big are your balls? That's the question. No one can answer that question. The reason I teach to get out quick is because it's much nicer to continuously just bank green than it is to bank red. But you have to live in red to get the green. This is your account. Your account is there to be drawn down into. But your target is never going to be the same. Your target will be affected by your drawdown, the amount of positions you're in, which of these are in big drawdown, which of them are in small drawdown, how much you've banked this week, this month, and this year. They will all make a decision on whether you hold. The reason I held the DAX today was because I was comfortable in this account. I wanted to see if I could get a nice big win out of it, and I did. If I had been 1% away from passing an evaluation, I'd have been out here. So my decision-making process would have been different because of the P&L on the account. There's so much that goes into it, and there's not something you can teach. It's just something that is. It's trading. You are trading, and you are the trader. You will learn by experience, and I have learned by experience that I am always out early. I know I'm always out early, but I'm always out early with a profit. I'd rather be out early with a profit than be in drawdown for another week on something that I've been in drawdown for 2 weeks on. Yeah, it's just my personal preference. I'd like to be in and out as fast as I can when the market lets me out, because I'm scared about the market going against me, because it does all the time. That's why we're in drawdown, because the market will always go against you because you can't time it. So get out when you've got a profit. If the profit isn't big enough for you, let the trade run. Someone said earlier, right at the beginning, I'm looking forward to increasing my risk. No, don't increase your risk. Hold your trades longer. Keep the risk the same, because the drawdown is the thing that is the pain in our backside. We can't get rid of that. Part of the course of position trading. But what we can do is control how long we hold the trades for. So if you're having trouble holding, or you're using the market reversal alert CA with a 0.5 ADR target, change that 0.5 ADR target to 1 or to 1.5 and manually position your TPs where you think it will go. And I always use propulsion gaps because we know they come to, the whole reason they're on the chart is because we know they get retested. So just do that. Just hold your trades longer. But the trouble you will find is, and this is something that you can only do by closing your platform, right? If you are watching something like US dollar yen hitting 200 ADR, yeah, and then bouncing like that, and you are short on it, you will close it because you are seeing the market pull back against you. You had a profit there, and the profit there is smaller than it was when it was there. Your brain will say, get out, because it's probably going to do that. Why? Because the last candle, look, did exactly that, this one. So you will get out. The problem with holding trades is not your conviction in where it's going to go. We know where it's going to go because we've got an indicator that proves it happens all the time. Every single one of these propulsion gaps virtually gets filled. We know it's going to come down to here. The problem is you're watching your P&L go up and down. If you stop watching your P&L go up and down, you won't close out your trades early. If you set TPs and never look at the US dollar yen again, that will hit TP. But the EA is programmed to get you out at a set target, which you set. So change it. Mine is now running at 1.5 ADR because I've taken a conscious decision on this account to target propulsion moves. But because I'm here all day, every day watching this, I will close everything out early still because I'm watching it. I closed US dollar yen there because it hit ADR. Valid reason. And it was in profit. Valid reason. I had 1 ADR profit. I took it. How could I have ever known that the yen was going to do that today, the US dollar yen? I couldn't. So that was enough. So I took it. I've made 13.6% in the last 2 days. But that's because we've been waiting in drawdown for anything up to 20% for a month, waiting for this yen move. But it's payday. And that's what I posted in Telegram the other day, didn't I? Yen's on the move. It's payday. This is what happens. You spend your entire life in drawdown and you have paydays. You just have to wait for the paydays. You can't see when they're coming. You've no idea when you're going to get a 3 ADR move over a period of 3 days on the yen. That's what we've had. ADR, 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 3 days on the trot. And this is exactly what I said was going to happen. Climb up the stairs, fall down the elevator shaft. I said it's just a matter of time. We're waiting for the banks to take profit. The only reason I know that is because I've seen it happen for over a decade. And you can see it happening over a decade by going into your charts, opening up your charts, going onto the 4 hour, zooming out, and you will see it happening over and over again. Every time they squeeze it, they pull it back. 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 They squeeze it really hard. They pull it back. This is just here. Go back in time. Pick any time you like. Anything you like. It squeezes, pulls back, enter, 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 exit. Squeezed, pulled back, squeezed, pulled back. It's just what happens. But until you've experienced it multiple times yourself, you won't have the faith in it. Therefore, you will jump out very, very quick because you'll be like, oh, it's in profit. Take it. Phew. That's the reaction. Your emotion is, phew. And why wouldn't it be? You're human. But you're not able to read the future. This thing could go like that on Monday, Tuesday, Wednesday next week. If it does, I'll be sitting there going, if it doesn't, it'll be coming down to here and I'll be going, oh, well, I'll be buying it. That's what I'll be doing. Because if it comes down to here, this will be massively, because that's what they've done forever. Yeah. So you just got to pick a target and be happy with the money that you make. You're not in control of the market. The market is in control of you. So you have to surrender to what it will give you when it will give it to you. You can't say, I need to be paid £4,000 this month. I made a 4.5% loss last month. We're looking at a 13% P&L in 2 days. I can't control when the market's going to give me my pay. The market pays me when the market moves in the direction that I've got my positions on. I can control that, but I can't control when I do anything but get out. That's the only option you've got, isn't it? So, patience. Did you say no more than 3 positions on a single trade? No. That's ideal. That's the norm. So 3 positions on a trade is the norm. If you go and look at most of my trades, I'm not going to be able to find one now, am I? But you're like, so that's 1 in, 1 out. That one is 1, 2, 3, 4, 5 and out. 1 in, 1 out. 2 trades, 1 in, 1 out, 1 in, 1 out. Squeeze. 3 trades out. I don't know if you can see these, but out, 1 in, 1 out. Another one there, 1 in, 1 out. So on average, a position will be 3 trades. So there's one there. There was 2. There's 1. That's a single. That's a single. Pound odd, 1, 2, 3, 4 out. This is a short position, started here in 2. Maybe it'll be 2, maybe it'll be 3. I don't know what that'll be. It'll be what it'll be, won't it? But yeah, there's no you only take 3 positions. You take as many positions as needed. 1, 2, 3, out. But this is why I use the EA. This is why the Market Reversal Alerts EA is built and is used, because I don't have to think about it. I get in when the market's extended short. Yeah. The EA automatically looks after my positioning for me so that I don't get in too tight, I don't get in too loose, but I get in so that I have an exit. There's the exit. 4 in this case. Could have got a little bit more. Could have got even more. But I have no clue whether it was going to do that or that. But what I had there was a profit. So I took it. That was a 1 in, 1 out. These are tiny. These are horrible, these trades. The single trades are terrible. They only make 0.25% profit or something like that. But how many traders do you know that would go, oh, crap, I only made 0.25% today? Everybody's losing money. I'm looking at this going, oh, should have held it. It's not a question of whether I'm going to make money. It's a question of should have made more. Always, isn't it? I'm always out too soon. Some people also when I used to run the paid room, people would wait for me to get into 3 positions and then they would take their first because they would see me getting in too soon and they'd see me getting out too soon. So what they would do, and it was a standing joke in the room that I was running at the time, was wait for Lee to get into 3, and then take your first position because then you'll only need a couple. But then when I get into 1 and get out, they're going, no, I didn't get on that because you only had 1 on it. It's like, it's all random. I've no idea, have I? There's nothing clever about the strategy or the system. What's clever is the methodology. It's working out how to make money out of something that moves at random. That's what's clever. There's nothing more clever than that. I haven't got a clue. I come in here and I do this analysis twice a day, every day. I haven't got a clue. I can look at it and go, in an ideal world, what should happen based on the facts and the information we've got from the last 20 years is when that happens, this should happen. So I go, the New Zealand dollar interest rates come out as normal. What we should see is some strength in the New Zealand dollar. Bang. Totally wrong for over a week. But that's what should have happened. That's what's happened in the past. When the New Zealand interest rate comes out as expected, the market rallies on it. It didn't. It decided not to do it this time. Even, fundamentalists are getting it wrong at the minute. Everybody is. But the clever part is it doesn't matter. We just get out when we get out with profit. And we know how to get out with profit. The difference. Greg made all his money selling stuff, not from trading. I don't know Lax. Oh, yeah, actually, you do know Lax, don't you? Didn't you used to work for him? Aren't you the person that used to be one of the teachers for him? So, yeah. I've run businesses. I know how business works. There's nothing wrong with running an education company. He's not running Learn to Trade is not a business where he says, I have made all of my money trading. I will teach you how I made my millions. What he's saying is, I run a company that teaches people how to trade. I have software and systems that will help you. What's wrong with that? Nothing. If he ever turned around and said he's made all of his money out of trading and it came out that he actually made it all out of education, then yeah, there's a problem. But I don't know. I have no idea. I've never looked into it. I'm busy. I haven't got time. Is there any update on the ADR indicator? Nope. You have the top of chart ADR 10. This is just some modification I made. So yours will be ADR. I've just recoded that mine's got half an ADR and a quarter of an ADR just for easy reference. But this is not an up. This is just my bodged version. Just for ease of reference, just so in here I can go, rather than me getting a calculator right every 5 minutes and going, ADR on this is 158. If you want to target half an ADR, it will be, hang on a minute, let me get my calculator out because I'm crap at maths. 79. I can just go, 79 is half an ADR. That's the only reason I've got that there. It's not a clever version or anything. It's just something I built. I could push it out, but I don't know why if people need it. You don't really need it on there. The ADR indicator is a visual indicator. It's to show you where ADR is. It's not to show you how big ADR is, because the size of ADR in pips has got nothing to do with anything. You shouldn't even worry about it. Irrelevant. What's relevant is when it's moved that far, that's what it does on average. That's what you need to know. How many pips are in that distance is neither here or there, is it? It's unique to this instrument. It's the line that's important, not the number. Always learning from me. That's always good. No losses. Oh, no, I do make losses. I do make losses regularly. Look at the Aussie dollar, New Zealand dollar. Every single one of these red lines that goes north is a loss. They're all losses, but they're partials. What I call a partial, not a loss. They're a scale out. They're drawdown control is what it's called. All covered in the course. So true. Don't increase risk. Hold longer. Yeah. Yeah. That's something I've struggled with all my trading life. I've struggled with holding trades. I always have, and I always will. It's built into me as a human being. When I see money, I want it. And it's built into every one of us. So when this thing comes down and it shows me $1,500, I take that $1,500 because I've got a wife and 2 kids and a mortgage. That's my mortgage. Not actually, it's less than my mortgage, but it's not far off. That's why that closes. Not because it's where I think price is going to stop. It's where I need to pay the bills. And everybody's got a different point they need to pay the bills, which is why I don't like trading on demo. I don't recommend people do demo trading, because demo trading isn't real. Your emotions couldn't give a monkeys if you went, screw it, I'm going to go 10 lots short 3 times because I'm fed up with this position. You wouldn't do that in the real world. On a demo account, it doesn't matter because you just get another one. So your emotions are different. That's where the market reversal alerts EA comes in. It takes your emotions away. The EA scales you in and gets you out when you've told it, I want 1 ADR, or I want $1,000. You tell the EA when you are happy to finish a position, and it will finish your position for you, and it will scale you in. It will scale you out. It will do everything so that you are not in control. So what I would say, if you've got the EA, Gavin, change it to 1 or 1.5 as a target, right? And then go to sleep and come back the next day and see how many of them hit that and that. You'll be amazed. Which is what I've done this last month. I've just decided, mainly to show Propulsion, how Propulsion works a little bit clearer. That'll be a broker. It's always the same numbers coming up. It's always brokers. Excuse me, you've stopped using us. Why did you stop using us? Because you're crap. I moved somewhere else. What if we aren't crap anymore? Can we have all your money back, please? No. So many phone calls. But yeah, so I've decided to show Propulsion. So when I'm in here now taking trades, you'll see me. What am I in? Swiss yen. So you'll see me going, right, all these entries have a target down here at the moment. So you can see the TPs. So I'm putting TPs on everything. If it gets 1.5 ADR in profit, it will automatically close it out anyway. But I'm showing where I would target rather than saying it. So you can see the targets on the screen. Where I've got my TPs is for a reason. So these TPs are here, not because of a propulsion gap in this particular instance, but because this high here, which held for absolutely ages and finally broke, I would suspect if we hit that, we're going to get some limit triggers as they try to buy that high. Yeah, support or resistance in this case becomes support. That's why that bounced, because it was a resistance area. The buyers broke it. When they came back to their entry prices, they added more to their trades. If they are still long, they will add again. That's why my TP is there. It's logical. Every TP I place is logical. There is a reason why price will get there. I don't just go, I fancy going down to there because it's a 6-to-1. Why would it go there? It would go there. Yes. It would go there. Yes. But why would it go there? There's nothing there that says I should be reacting at any point. So I want to try and demonstrate more why propulsion works. So I've decided to do that, and you'll see that now in the live rooms. So it'll help, hopefully. I just asked the missus if I could show her my P&L, and she smacked me. More than one P&L, Brian. If you could only trade one asset, what would be your favorite? I haven't got one. The one that moves. You've got to, if you're asking that question because you want to specialize, I would say don't. Because, right, one of my mentors in the past, Kunal Desai, right? He's a very, very successful stock trader. He basically trades what moves, right? He has a portfolio of 20,000 instruments, something along those lines. Basically, any stock above a certain market cap is tradable as far as he's concerned. Do you think he goes, I'm only going to trade NVIDIA today because NVIDIA is my favorite? If NVIDIA's been going sideways for 4 days, how's he going to pay the bills? No. So what does he do? He trades what moves. Yeah. If something sets up, right, this is what the dashboards are for. CAD yen is set up for a long right now. Yeah. Because it's extended. Trade CAD yen. You don't go, oh, I don't like the CAD yen. Why? What's the difference? Whether this is the CAD yen, the euro yen, the Swiss yen, the US dollar, whatever it is, it's extended. The market's going to take profit on that move. Get in. So if you try and pick an instrument, what you're doing is you're just limiting your ability to make money. Doesn't matter. Everything moves. Trade it. Yeah. If there's 2,000 stocks that you're trading in the Russell, for example, right? And 4 of them have got massive earnings reports coming out today, and 3 of them have had an earnings hit, and 1 of them's had an earnings miss. What's the difference? The one with the earnings miss will gap down today. The 3 with the earnings hit will gap up today, right? Every single one of them is either a gap and go or a VWAP fizzle. Yeah. Who are those 4 stocks? No idea. Does it matter? No. They're all going to move today because they've had earnings reports, right? The CAD yen is extended 3 times ADR in 3 days. They need to take profit. Is it an opportunity to go long? Yes. That's all you need to think about, right? Take this away. I don't care what that is. Doesn't matter. Is that going to move soon? Yes. Right. Let's see how we can make money out of it. Don't think about what it is, why it is. Crypto. The only reason I don't trade crypto is because no one can tell me how it works. I know how this works and I know why it works, and I can see historically what's done in the past. Crypto, no one even knows who invented the thing. Some Japanese bloke, apparently. No one's ever met him. Is he sitting on every Bitcoin in the world secretly, ready to press the button and walk away with $25 quadrillion some point next week? Maybe, maybe not. But until someone tells me why that thing goes up and down, you can't trade it. I can trade everything that I know works and why it works because I understand it. When the banks dump 10 million CAD into the market because they need to sell 10 million yen for a Canadian company that's transacting with a Japanese organization on the commercial desk in Barclays, I can tell you what's going to happen to the CAD yen. When Bitcoin goes up by 5% in a day for no reason whatsoever, I have no idea of why that's moved, when it's going to move next, or what direction it's going to go. But I can tell you when the banks have made that order, they've got an opportunity for a profit take because I understand what goes on under the hood. So I don't care what it is. It doesn't matter, does it? It moves. So move it. Trade it. All good. Everything's good. Where do you show your trades on the chart? The lines that show your trades. Where? So this you're seeing here is part of the propulsion gap indicator. So the support resistance propulsion indicator, you've got show trade history, true or false, which basically shows the trades, your historical trades. It's just part of the indicator that I built. Basically, what I did was I amalgamated loads of indicators that I use. These are all available. You can get this indicator is available for free. This indicator is available for free. There's lots of these indicators which you can get for free and use the independent versions of them. I've built my own one indicator does all because I needed a good support resistance indicator. And I wanted to have everything incorporated into one, because the problem with running millions of indicators on your chart is lag, basically. The more indicators you have, the more conflict you have, the more everything starts to screw up. So I basically merged everything. So all that is that. But what you can do, if you wanted to, is if you open a new chart and you go into your history, you can grab any trade you've ever taken and put it on the chart and see it. Yeah. So that's what that does, in effect. What's the time? 20 past 4. Got to go in 10 minutes. I would love to see on the EA ADR TP multiplier. One position, half of an ADR, quarter of an ADR. Two positions, half an ADR. Three positions, three quarter. It doesn't work that way, though, does it? So if you think about it, Gavin, if you were to do that, what you're doing is you're saying the further in drawdown you go, the further away you want your target to be. So the more it's pushed, the bigger the pullback. What happens when you get a flag break and you've set it to there? And what happens if the nearest propulsion gap is there and you've set it to there? That propulsion gap becomes where they buy the next round. It wouldn't work because the market doesn't move like that. That's too organized. This is random, chaotic. I understand. I can get why you're saying it. So if I'm going to get in once, have a little target. If it takes two positions, your assumption is that the pullback will be deeper. Not the case. Look at the size of that move. Look at the size of that pullback. Look at the size of that move. Now look at the size of that pullback. So what you could do is use a fib. Every pullback, regardless of how long the pullback the trade has taken, will pull back to a flag, a shallow pullback, a medium pullback, or a deep pullback, a Fibonacci level. Yeah, I hate fib. I don't trade fib. I don't use it for anything other than how far can we go? Is there a propulsion target in line with a fib level we know gets respected? That's what I use it for. So it's very difficult to target in the way that you're saying because it's working off of the fact that the market will logically do the same thing every time, which it won't. I have tested similar sorts of things in the past and it doesn't work. The odds of the market staying within ADR are 58%. What do you do after 5 or 6 positions? Are you now targeting 1.5%? Doesn't work. Lax, yes, you've just said you were the guy that worked for Greg Secker, yeah. Yeah, so he did make all his money out of, I don't know how you know that, but if you do, yeah, so if he made all his money out of teaching people how to trade, but has he ever said he's made all his money out of trading? He says he used to be a trader, which may well be true, I don't know, but he's never actually said, I don't think on any of his advertising, this house, this car and everything was made by trading money. Has he? I don't think he's ever said that. But your assumption is because he teaches trading, that's how he earned his money. But you know what assume makes, don't you? An arse of you and me. That's why it's an assume. Fair play to him. He's doing very, very well. He's very good at what he does. I've no idea if his education's any good because I've never done it, but we've had this conversation before, haven't we? Lots of propulsion gaps one side would mean extending ADR-TP. Yeah, but you still don't know which propulsion gaps are going to be honoured. So we've just filled that. Is that one ever going to get hit? No idea. Yeah, the propulsion gaps don't get filled. Look, that one didn't get filled. Those didn't get filled. That didn't get filled. That didn't get filled. That didn't, probably did. That didn't get filled. That didn't get filled. That hasn't been filled yet. So the only one we've filled on this particular pair is that one, the closest. There's nothing that says this is ever going to get hit. It will at some point in the future, I'm sure. Could be 3 months, 6 months, 2 years. It could be next week. But you can't target it just because it's there. You target it because it's somewhere you can take profit and it's a likely area to be hit. That's it. Lax, yes, he has. He has said he's made money out of trading. He bought it all out of trading. He might have done. I don't know. I'm not going to get into a legal case about this. I don't care how he made his money. I just find his adverts very entertaining. But his adverts are very much targeted at new people into the market. They're targeted at people that want to learn about the markets. And he teaches about the markets. But as we know, the markets are not the sort of thing you can just learn one thing and suddenly make a fortune out of. Money makes money, as they say, doesn't it? You've got it, you can make it. Yeah. Look at Warren Buffett, most successful investor on the planet. He only makes 8 to 12% a year, but he has billions. And if you could make 8% of billions, you would be a billionaire. And that's why he makes money, because he's a billionaire. Billionaires can't fail to make money. You earn, this like Microsoft, he makes, or when he had his fortune before he gave it all away, he couldn't spend it every day. The interest on his money, on his wealth, was more than he would ever spend. He could go out and buy 5 super yachts a day, 10 Learjets, and buy an island. And he would still make more interest on his money than he'd spent on those 5 super yachts. You can't fail to make money when you have it, because you have, and this is why the banks work, and this is why we do what the banks do, because the banks can't fail to make money. If you have the ability to move something from A to B with a guarantee, you can't fail to not make money on the move, can you? You can do it whenever you want to as well. So what you can do is screw people over on the way and make even more. And I think that's where the ICT concepts come from. The smart money. There's nothing smart about an ICT concept, because it loses a lot. That's not smart. It also wins a lot. But if you stop the losses, you make more. Where do you show the trades? Oh, yes, just answered that. Lots of propulsion gaps. Yeah, Tom Hugard has a losing week so far, about 50k. But he would made a fortune not using a stop loss. Yeah. But that's not Tom. Tom's a scalper, and a very good scalper. And again, is somebody else I admire in the industry. Yeah. He shows you every day all of the losses. All of the losses. When it goes wrong, there's lots of people out there, I won't mention names, but there's people out there with Telegram groups and stuff. And there's one really prevalent one out there at the moment who is doing a lot. And he runs a closed Telegram group where you can pay to access it. He's got a free Telegram group where he gives a load of his information away for free. I've been following quite a few people like him over the years, and you see all the results coming out, all the brilliant trades. And if you look into all of the trades taken, the ones that don't work out, you never see the result. You only see the winners. The losers somehow vanish. And it looks incredibly profitable and incredibly good. But the losers are always removed. Tom Hugard shows every single trade. Like you just said, he's lost 50K this week. Open and honestly lost 50K. Why? Because he's a trader. I lost 4.5%. This account last month lost 9.5%. In here, every day, every trade, you saw every trade unfold. You saw every trade taken. You saw the P&L. It was 9% negative. 12% it might have ended. I can't even remember what it ended on. 9 to 12% loss. I made a loss last month. I do, because I trade and I can't win every month. If I could win every month, I wouldn't be sitting here, because I would make endless money. You can't, because the market doesn't let you do that. Tom's not able to make money. And I know why he's not making money at the moment. He's not making money because the ATR of the stock indices is dropped through the floor. And it's very hard as a scalper to make money in a low ATR environment, because market doesn't move far enough and fast enough for you to get size on. That's why he's losing money. That won't last. That volatility will pick up and he will suddenly come back and go, here you go, here's my 250K month. And everyone will go, ooh. But right now he's probably getting Telegram message after Telegram message telling him he's crap, as I do. Position trading, you don't use a stop loss. No stop loss, you're going to blow your account. I've been doing this for 4.5 years. I haven't. Go back and look on YouTube. It's all there. You know, but sounds like you were just talking about Nick Sean. I didn't mention any names. You did. But yeah, you know, I can't stand his ads. Not Nick Sean's thingies. What's his name? Greg Seckers. Yeah. They do annoy me because it's selling the dream, and it's not the dream. That's not the delivery. You're selling the dream. You're selling the keys to the car that you can never own. You can't get the Lamborghini. You can't get the mansion and the Learjet because you haven't got the money to do it. He also runs a brokerage. He also he not only teaches you how to trade, he takes a cut of every trade you take and a subscription to the software. That's a business model, isn't it? Thank you for answering my questions. No problem. Again, I'm not saying Nick Sean hides anything. All I'm saying is certain people that have groups that I've followed, you know, stuff disappears. It's weird. I was waiting for a post from somebody to explain about their trade that they'd taken, because I was watching the trade and I was following the trade because I was in the trade. I was in the trade in the opposite direction to the person that had sent the signal out. And my position took a good week or so to play out, and I never heard anything about the trade that was taken, and I suddenly made a profit on one of these trades. Right? The person was in it the other way. I haven't heard a peep about it. Funny, isn't it? That CAD yen looks like it's going to break longer, guys. Let's get in. I'm getting in again. I'm adding 2 more. Brilliant. 3-day drop. What's happened to that CAD yen? Gone quiet. It's vanished. Because the leverage and the lot size that was on there, I'm pretty sure, is probably sitting in something like 60% drawdown on the account now. That's why it's quiet. Anyway. Mentioning no names. There's a lot of people out there like that. You know who they are, and you know all about it. I was in Nick Sean's group in 2021. He wasn't even close to being profitable. Since he started hedging, he's been doing well. He used only 1 stop loss trading back in 2021. I don't have a problem with people that don't use stop losses. One of the reasons I started looking at Nick Sean's stuff was because he didn't use a stop loss. That interests me, because it says to me that somebody's identified what's gone wrong. But then when hedging came into it, I ran away because I don't know anyone that's ever made money hedging either. The reason people hedge is because they think that's what hedge funds do. They don't understand that hedge funds do not take a long and a short on the same instrument. That's not hedging. People think hedge funds go long and short on the same thing. Hedge funds don't do that. Hedge funds take the opposite position to a commodity that they are expecting to appreciate or depreciate in price, and they take the average as the profit. They're an insurance company, hedge funds. They don't make much money, hedge funds. Their job isn't to make money, it's to cover loss. But people think that hedging strategies work. They don't. All you're doing every time you hedge is you're getting yourself into trouble. If you were to go long here, right, and you took a hedge short, you've still got a big problem. You've got to get out of that long. So what are you going to do now? Go long and long? Brilliant. As it's going down, you're suddenly going to decide, actually, no, this is going the wrong way. I'll go short. And then it goes up and you get out your hedge with break even. And now you're stuck in a short. You're always stuck in a position the wrong way. It's a nightmare. Incredibly complicated and hideous to manage, which is why nobody does it successfully that I know of. There was a guy that used to do it in another trading group as well. And I joined his trading group years and years and years ago for a while. Again, another $99 a month, gone for about 6 months of my life. So there's another $600 down the pan to figure out that hedging doesn't work. But, you know, he could never get out of his trades. Yes, he had a permanently green P&L, but he had this permanently red P&L that just seemed to get bigger and bigger and bigger, like an ascending triangle, until suddenly he would go off on holiday for 3 weeks. And then he'd come back and go, hey, everybody get out of those positions? No, I'm still stuck in them. Right, well, let's start again. Why? Now I know he'd blown all of his accounts because he got stuck in a never-ending expanding loss, which is what hedging creates. So at some point, the reset button has to be hit. You only learn all this after you've been through it all, and if you've got a mathematical brain, you can figure out what's going on. It's very simple. I want to know what Greg considers a wild swimming in his advert. I know, yeah. He likes wild swimming. I presume that's just going in the pool naked. Wild swimming? Or is it going in a river? I don't want to go in a river. There's lots of poo in rivers in the UK. You don't want to go in rivers. True, I followed him for about 3 years. All these people always like you guys when you on money rain streak. But when you lose, now and then all the haters suddenly appear. Yeah. I get it all the time. I don't know how many are in my banned list in my Telegram group, but my banned list, blocked list, is hundreds, literally hundreds. Because every time somebody does something stupid with an indicator or an EA, it's my fault. No, you haven't read the manual. You haven't watched the video. You haven't watched the bootcamp. Why are you buying an EA? You don't even know what. Not mentioning any names. You don't even know what exposure is. The fact that when you go long on one currency, the other currency is a short. I have told you 3 times and you still don't understand it. Stop trading. It's not for you. This is a job like any others. Some people aren't going to be good at this. Stop. Don't hate me for it. It's not my problem. Yeah, he started that at the end of last year. You know, I'm not having a go at Nick, but I mean, Nick sells courses, Nick Sean. He makes a lot of money out of selling courses. His main course costs thousands. He also has a course on compounding. He knows compounding doesn't work because he's openly blown many accounts trying to compound them. People still buy the course. Just nuts. You know, I think you just have to look at some people in this industry and go, why are you doing that? This guy has just openly sold you a course for $300 about compounding. He's shown you videos of him blowing accounts compounding and said, you will blow accounts doing this. Buy my course. You bought it. Are you an idiot? Sorry, but if somebody shows me something that doesn't work and then says you can have this for $300, I'm going to go, all right, mate. I don't know. It just baffles me, some of the stuff that I see in this industry. It just baffles me. David, I watched a documentary last night about how countries are wanting to change away from the dollar, into the other thing, China, basically, isn't it? Basically, mainly is the center point, China and Russia. That will have an impact on the dollar if it happens, and when it happens, I think it probably will. But then what will happen is the dollar will become not the world's currency anymore. That currency will contract. We will probably start to trade the yuan because the yuan will suddenly have tighter spreads. There'll be more interest in transactions on it and it will become more stable and we will trade it. So we didn't used to trade the Swiss franc. Going back 10 years, we didn't trade the Swiss franc because it was pegged. They unpegged it. Now all of a sudden we trade the Swiss franc every day. Things change. So when that happens, it will possibly be something we'll pick up, but I'm a late adopter of stuff like that, which is why I've never got involved in crypto. Crypto's over. You missed it. It happened for a year and a half. It went nuts. You missed it. I'm a late adopter. Something needs to be stable, and it's not. And that Chinese mix of other currencies will happen, maybe or not. I don't know. But if it does, we'll be on board. Anyone seen that Nirav advert when he says, you're about to watch another useless retail trading video, aren't you? Yes. He says it with disgust, and then he teaches you about useless retail candlesticks. And he shows you his candlesticks, which are retail candlesticks. They've just got numbers inside them. Again, he says he used to work for a bank. He used to work for Barclays. Yeah, I've got a mate who used to work for Barclays. He never made any money working for Barclays. He worked at Barclays. Good for him. Nirav may well have worked at Barclays. Good for him. Why does it make him qualified to teach you about useless retail candlesticks that I sit here every day and make loads of money out of? It's an advert. Why? Because he sells a course for $2,000. On what base the quotes are? Oh, you're talking about, sorry, Brian. But if it were to happen, I'm curious what and kind of worried about whether Forex would still be a thing. Yeah, all Forex is a currency exchange rate. So whatever this new currency becomes, if it happens, will be an amalgamation between the Brazilian real. Is it? I don't know. The Chinese yuan, the Russian ruble, and the South African rand, I think. Can't remember what it's called, but whatever it is, and this is how much I'm looking into it at the moment. Not on the radar enough. So if that becomes probably a commodity, maybe, don't know, or if these currencies become dominant, i.e. the yuan becomes dominant because the vast majority of these countries are now trading through it, the yuan will become part of our portfolio and we will trade the CAD yuan. I don't even know what the ticker is for yuan because I don't trade it. It's just another currency cross. It just has to have liquidity and tight spreads. Same as we've got the Mexican ruble, the Mexican peso. We don't trade it because it's a wild, nutty thing. At the moment, that is a wild, nutty thing. There's lots of things like the Hong Kong, Singapore dollars and stuff like that. We don't trade them because they're nuts. They're called the exotics. We don't trade them. So if something comes into the fold like the Swiss franc did, we will start trading it. Brokers will be the ones that will determine that because they control the spreads. But worry about it when we worry about it. At the end of the day, you don't have to trade it. You could drop the US dollar and be absolutely fine. You could drop every US dollar pair off the chart right now and make a load of money. Yeah, look at the P&L at the moment, right? I have no US dollar exposure. Nothing. There's nothing on the US dollar at the moment. I can still make money without the US dollar. I don't need it. Yes, AZ seeing him every morning when I'm about to watch me. Yeah. Nirav. Again, Nirav's course is, I've done it. I bought courses. I buy courses sometimes because they're intriguing. Not because I think there's anything in it, because I find them intriguing. There's nothing in there I don't know. Nothing clever. There's nothing new. It's basically using volume profile. And again, it's got a strike rate of 50-50. Volume profile is just another way of creating new support resistance zones you can't see on the chart. Mainly using these things. A volume profile on a day will look something like that. This is a B. You'll have a P volume profile. You'll have a volume profile that looks like that. Merge those three together and you get a new volume profile that looks something like that. He teaches you to merge multiple volume profiles together using a piece of special software in Sierra charts to create that volume profile, which gives you an area which is the new volume weighted average price, which you can trade from, or point of control, which is what? another support and resistance area. It costs you £2,000 to find out that is a support and resistance. It's just another one. Yeah. Why not add pivots onto your chart? They're the same thing. They're lines. Why is price going to move from that line? It's not. Just because that was the big area that most of the action happened in doesn't mean that today that is where the banks will stop. Because when we get to that point, if there's more sellers than buyers, that point of control will fail. This resistance from last month's high, when we get to it, we'll have limit orders trigger. If there's more buyers than there are limit orders at that level, it will fail. What are the odds of that happening? And what are the odds of his one happening? This teaches you, this £2,000 course, exactly the same thing as you will learn in every other course. Price moves up and down through time and hits support and resistance zones. He teaches you to use a stop loss to try and take advantage of it. And it's incredibly complex software, Sierra charts as well. You need a degree to even operate the thing. So, and you've got to buy it. Marathon session today, yeah, it is. I've got to go because I've got a class to get to. 15 minutes ago, I was meant to be finishing. So, are the exotics worth trading on high time frames? I wouldn't bother. Don't need them. You've got 28 FX pairs. Use those. Shouldn't Nirav be sued for using Barclays logo? Don't know, Peter. If you want to find out, email Barclays. See if it happens. Don't do that. Well, you can do. He used to work for him. Maybe he's got permission. Probably has. But if he hasn't, that's a good question. Inquiring minds want to know. I'll be back Monday. I've got to go. This is a marathon stream. Came on an hour early today as well. Back on Monday, same time. 7:50 in the morning for the Frankfurt session, 2:20 for New York. Have a good weekend. I'm off spinning to go and sweat more because I'm already sweating in the room because my PC's on and I've got a light on me. But anyway, I'm going to go and sweat a bit more. So have a good weekend. I will see you guys on Monday. If you need anything, I'll be in the Telegram group over the weekend. And yeah, good luck with everything else. All right, see you on Monday. Have a good one.